All right, you're live.
Okay, welcome everyone to our March 20th Friday trade alert. We're expecting the bears to slowly but surely take control of the S&P 500. Right now, there seems to be a great mispricing in both the VIX in the short term, as well as how long this pandemic epidemic is going to last in Europe and specifically in the United States, plus the chances of this resuming full throttle back in China as well as they try to go back to work. The risks are that supply chains break down, demand breaks down, the government has to bail everyone out, which is going to drive all capital into the bond market. We're seeing risk parity funds start to have huge losses, and this is just the tip of the iceberg. So I think the big implosion in the stock market is yet to come. And nothing short of closing the stock market or the Fed ruining the value of the dollar would most likely stop this. If we even came up with a vaccine, which I'm skeptical we will, then we're still 12 to 18 months out before that could be produced. Now I'm talking about putting chloroquine with zinc into people to stop it on its tracks, but that still does not stop the spread of the virus nor the overflow of the health system or the general fear that's slowly growing in people's minds. So we still have doctors and nurses and professionals who are looking at their accounts and they just haven't sold yet. They think it's going to come back. They don't understand what's about to unfold. There's documents getting leaked from the government about how they're planning for 18 months of this to slow down the spread and also preparing for supply chain shocks. So with all this together, it should be a great buying opportunity to buy stocks. We're looking at healthcare, biotech, medical devices, e-commerce, and then some defense, military related stocks. As I think what happens next is a prolonged downturn in the stock market. All the funds of the world have to be centered into buying up bond products. And then these government treasuries that are raised, the capital will be flowed into key sectors that will solve this crisis and then try to keep the rest of humanity at least on life support. We'll see how long they can keep that going, but it's a mistake to think that we can just print money out of thin air and that there's unlimited resources through a printing press. So that's the big picture. This serves two purposes. Number one, I do anticipate very substantial returns with low risk because it's risking about 10% of the total portfolio. Okay, I'm looking at any. Where are you seeing an issue? Oh, September 18th. Let me just check. Yeah, sorry. There it is, September 18th, my mistake. So the big picture is we want to have a hedge when we buy stocks, and this will provide our hedge. This gives us 18 months of downside protection, which is what everyone's expecting as the best case scenario for how long this is going to take to unfold and really develop herd immunity from the you-know-what, which we can't say, otherwise we'll get blocked. Okay, so this is the positions. I have reorganized our returns. I was getting a lot of confusion when I was giving allocation sizes for basic versus pro members. And so I do want to make this a lot easier to follow moving forward. So this is based on total capital following our system, whether you're a basic member or a pro member. So that's one. Two, I have shown the results for our portfolio. If you have a boot camp plus pro versus a boot camp, or rather a pro with no boot camp. So if you did put our hedges on in the boot camp program, which was a out of the money QQQ put and a long silver call option. Those are paying off quite well right now and still have a lot of room to grow and a lot of time premium. So with all of those added in, you're actually up 2.1% in March when most people are getting destroyed. Now I have pushed to keep accounting easier. I've only placed all TLT trades in the TLT tab. Pull up our track record. So I have taken out all the TLT trades from the SPY tab, which was confusing people, and simply moved them to the TLT tab. And down here I have the boot camp. So I'm just deleting these two spots to return the profit loss for our, oh, Gary, it's just the September one. I had 19th instead of the 18th is the only change. So I'll be reporting the profit loss with the boot camp and without the boot camp each day. Now this was up considerably more before this little bounce, and I do expect it will continue to generate a large return. We put this out on 3.3 and 2.25 in the boot camp with 1% of our total portfolio as a hedge, and that hedge is paying off. I've simply kept the exact same amount of contracts for all of my TLT positions and move those to the TLT tab. So if you were on a trial and you were getting these TLT plays on Monday, Wednesday, Friday, you'll get the rest of your trial, including our Thursday program, until you're expired. If you're a pro member, no longer will we confuse you guys trying to trade the TLT on our SPY day. I understand that that was really confusing people. Folks like Murray, who's been very accurately following the program, accidentally had twice the exposure on the TLT, which is a good thing because I do love the TLT play. It's up 4.5% today, and that's my most highly confident trade outside of the stock market crashing. So that's just one accounting change. The GLD calls, I've moved to the metals tab. Did not change those. We're still long, same amount of contracts as prior. And this way we can just keep our ducks straight. So on Thursdays, moving forward, we will continue to only trade emerging markets, TLT, and the precious metals at this point in time. And then on the Monday, Wednesday, Friday, we'll manage our positions in the US equity market. And again, the big idea is we want to short the market on the next pop, which we got today. And then we're going to start layering into a handful of ETFs that I believe will be benefiting from the probably trillions of dollars the US government's going to raise to try to fight the current crisis at hand. So again, we're looking at healthcare, biotech, medical device, defense, and e-commerce ETFs to rotate into, and I'll be looking for the VIX to pop above 100 to enter that position. So these puts will be, if I'm correct, delivering massive returns, which are all located right here. And it'll give us the confidence to start buying the ETFs that are at fire sale prices. So that's the big picture of what I see coming. Timing really depends on what the US government does. If it wants to slow the spread of the virus, it will quicken the timeline of us taking profits on these puts because they'll go into lockdowns and that will just crush the economy. Now, if the US government wants to just let the crisis unfold quicker, then this could take longer to play out because then we'll be waiting for people to get sick and overwhelm the hospital system. So we're looking at Italy, France, the Netherlands as a good leading indicator to what to expect in the United States, delayed by perhaps 2 to 4 weeks. The only thing I've been wrong about predicting in this crisis has been how fast it's unfolding. I was originally thinking we would have cases popping up by March 7th and deaths by 3/15. And instead, we're getting deaths on February 28th and now we're getting lots of deaths, and hospitals are now getting ran over. So this could start to go in our favor by the end of today. And so I really don't think time's on our side for this trade. Now, are the markets going to do everything they can to push people to buy stocks and try to pump the market up so insiders can get out and buy bonds? For sure. So I do expect a little volatility, but just keep in mind with these trades, we have a lot of time premium. Okay, so let's go through from top to bottom, and then I'll look at some data. So if you're an existing member, you close that 320 TLT call option and hold all other call put options. Okay, and now again, we will manage those TLT and GLD calls as well as the put option that's really profitable on emerging markets. Next Thursday will be the day we will manage that. And so every Thursday we can maintain our exposure to the bond and metals market. If you're putting this trade on, we can now manage this position every Monday, Wednesday, Friday is when we have webinars to manage our US equity exposure. And the big picture is let this puppy tank, watch for the VIX to spike well above 100. And then we'll start off by selling puts against the ETFs we want to own. And so this will let us generate some extra returns and have the downside protection well in place to have high confidence that it's a safe bet on our end. Again, the total cost of this should be around $7,500 per 75K or 10% of your total assets. And again, this is 18 months of downside protection to allow us to build a position into US equities when the time comes, which I believe will be a much lower S&P 500 and a VIX above 100. The returns, again, this is with the boot camp where we have the QQQ out of the money put and the SLV long call. This is our return currently without the boot camp. And we were up 15% earlier in the month. And then the risk parity funds like Ray Dalio got blown out. They had to sell, not what they wanted to sell, but what they could sell, which was US Treasuries. So we saw that profit pull back a little bit, but I do anticipate that going well above where it was previously. Oscar's saying, do I need to sign up somewhere or could I buy these puts? I zeroed out it. I'm not quite following that. And I'll unmute everybody in a second. Let me just get through the trade alert. Basic membership, again, just buy and hold, no options. It is having a little bit of drawdown from that TLT pullback, but again, I do like its positioning. This product only trades on Mondays, so we're not making any adjustments except for on Mondays.
That's a buy and hold, Jason, that basic.
Oh, that's basic.
Thank you.
So that's Monday, Wednesday, Friday. The buy and hold's down here. So for those of you following the buy and hold, that will adjust on Monday. It has no changes. So you're in cash on the SPY with 40% of your capital. You have 20 shares of the TLT, 20 shares of GDX, 10 shares of Yang, and another 440 in cash that's designated to buy Yang per $7,500. So this is our buy and hold portfolio, and it's down 1.7% this year. It was up again, but the risk parity funds blowing up did pull back our profits slightly on the TLT. But as you can see, the TLT is behaving once again as the Fed has begun intervening. Let me go through these 5 trades and we'll talk about sell targets. Okay, so the first trade we have is the 91 days to expiration, the June 19, 2020. We're buying the 220 strike. Our goal is to sell this when it hits a target of 200. So that'll be a very profitable trade if and when that is achieved. The next trade is 182 days to expiration. And I apologize, I hit the 9 instead of the 8, September 18, 2020, 182 days to expiration. We're buying the 200 strike, and our goal is to sell this when it hits around 180. And again, we have more time for that to occur. Trade 3 gives us 364 days of downside protection. It's the 180 strike. And again, we're looking at selling this if and when it hits around 140. Or if we believe a bottom has reached. So if we do think there's a real solution that will stop the turmoil in the markets, we would sell these early. And next trade is the January 21st, 2022, 672 days to expiration, $140 strike. Target for this is approximately 120. And again, I will sell this early if I think a bottom has been reached. The last trade, there's 3 of these. This is the most leveraged trade. This gives us 728 days to expiration. And we will start selling this if and when we get to 110, 190, or when we believe the bottom has been reached. So this is the most aggressive trade we can possibly buy today. The duration that's one further doesn't have this low of a strike. And this will be our last line of defense. If we have miscalculated how large the stock crash is and are jumping into equities, this will again be our last layer of protection as we slowly take profits on each of these. Now, again, if the market just rallies from here, these all have the potential to lose 100% of their value. So that's the risk we're taking with each of these trades. They are all a downward bet on the S&P 500. Dallas says, what's the expected return on each of these puts? It's extremely large. It would take quite a while for me to calculate that. Thousands of percent, anywhere from 500 to 10,000%, depending on which one. It all depends on how quickly the market sells off, because the volatility index makes the relative value of these skyrocket, plus how much time premium you have left. So substantial potential profits from these trades if we do get a stock crash. And again, we have a layered approach. So to look at it from a big picture, we're starting off at the 220, then we're going to the 200, then the 180, the 140, and the 100. And so we will take profits on these as we hit our targets, or if we believe we've reached a bottom. Now, if I'm wrong and the stock market rallies from here, again, you're risking around 10% of the total portfolio, and these could expire completely worthless. Okay, so let's go ahead and open for Q&A, and then I can go into some data points. The big crash now, guys, is the currency markets are just getting wrecked. The dollar index is at 102.31. The value of the Aussie dollars lost half its value. And I think we're about to see. Rose, I would, if you're trading with less than 75,000, I would definitely get rid of half of the cost of this. So if you had 30,000, then you might want to just take the first 2 trades. But whatever you do, don't take more than a 10% total risk versus your entire portfolio size. Okay, let's go ahead and post all your questions in the chat first. We'll get through that quickly, and then I'll start doing live mic questions.
Bye.
Tony Cullen says, what do you expect the ES to go? I think we're going to have a prolonged sell-off that will last up to 18 months, Tony. That's the big picture here. And a potential crash of 75 to 90% for the general market, unless they do something that I haven't anticipated yet to fix this. Oscar says, what platform do I have to use? Any broker dealer. We like TD Ameritrade.
Yeah, any of them work though, guys. It's just the vehicle to get you to the market, right?
Dollar Handu says, will there be a crash on Monday? Well, I believe that it's a random walk. from day to day, but it's much easier to predict the long-term future. And the long-term future is that humanity must go in and out of lockdowns to survive the crisis unfolding. And it puts governments in a really tough spot. Do we starve to death and save human life and protect our doctors and nurses? Or do we save the economy and let the current crisis ravage through society? So that will dramatically change the timeline. Unfortunately, I just don't see any way of avoiding this crisis in the near future. So even if they came out with a miracle vaccine, that's still 18 months out. And the big problem here is not the fatality rate. It's two things. It's number one, that this crisis unfolds through, here's the big picture. Kids just will not listen. So they're out mingling around, collecting you know what, and bringing it home to the parents. The parents don't realize they have the you know what, and then they go to work because they have to pay their bills, and then they spread it to more people. And eventually this makes it to people who are over 40, and it's extremely fatal. Not necessarily that you will pass away, but that it's going to put you in a pneumonia situation where you need a ventilator and ICU. So around 10 to 15% of the people catching this need extreme medical care. So this is the crisis unfolding. Really, the mortality rate is actually a positive. The higher the mortality rate is very good for letting the virus kill itself, one. And two, that's not a big healthcare cost. What is a big healthcare cost is having to have ICU seats. So the real problem here is that this spreads without detection. Before you have it, you could spread it for 14 to 21 days. After you've finished having it, you can still spread it for another 7 to 14 days. So it's absolutely impossible to stop the spread without massive isolation, which is going to cause huge panics, economic slowdown. If you let it just rip through society, then we're going to have this timeline happen much quicker. If they go into on and off switch with lockdowns all over the world, then this could be a very prolonged depression. So that's really the big picture. Will it crash on Monday? I don't know. Will it crash if we have to go into lockdowns? Yes. When will they pull the trigger on that? I would say sooner than later. So my concern is that time is not on our side. I want to get our positions ready. While we had a little break on the VIX, not too long ago, the VIX was at 80. Today it's at 60. So the relative cost of these options is something like 20 to 30% cheaper than they were just a few days ago. So this is our chance. If we have a little bit of a pop next week, fine. But in the long term, we know what the governments must do to survive. We also know that they're going to have to spend trillions to paper up this mess. And that's going to pull resources out of the economy. And that's going to force money to come from somewhere. So there's not an unlimited amount of resources. If you think economic output's going to increase during the next 18 months, yeah, right. So we're going to have less economic output, and we're going to be raising more money through the government than ever before in history. So that's going to be detrimental to the stock market. Okay, I'm going to look at some more questions. Okay, Oscar says he is using 17K cash, 7,000 in Robinhood. So you might want to, yeah, I guess if you could put the option trades in for almost, you might have to reduce some of those. And then you might consider using interactive brokers, Oscar, who would give you a very cheap loan to double your capital size. But I wouldn't take on more than a 10% total risk in this trade. So if you have less capital, then you might want to consider only the top two trades is what I would do. Or look at the buy and hold portfolio. DD says, is it 10% of the SPY or the TLT, or is it different? This is 10% of your total portfolio value. So having to explain 30 versus 75, SPY versus TLT was confusing people, DD. So from now on, I'm going to base all positions on the total portfolio size, no matter which product you're in. So that makes your life a lot easier to follow. Randy says, why didn't we purchase puts a month ago? Well, we did buy
We
puts a
did.
month ago. Yeah. So
I closed out my last one for like 2,900% or something.
yeah, we've been buying puts the whole time. Dallas says massive isolation will limit deaths to maybe 10,000. Prolonged action will lead to 100,000. Yeah. Oh, you're dreaming if you think this only kills 100,000 people. FR says, how do you see gold reacting? I think first, all the money is going to be forced into the bond market to capitalize the governments around the world, and they must incentivize that investment. The only thing I don't like about just betting completely up on the bond market is that we're seeing risk parity funds blowing out and then having to sell their treasuries to stay alive. So I think we could see some volatility on the way up in the bond market. So that does make me inclined to start looking at longer duration call options so we can remove some of that noise. A lot of our members made a ton of money last Monday. I said, if you got bills to pay, take some profits. Otherwise, we're holding through this. And we made the right call in terms of predicting that there'd be further downside. What I didn't anticipate was so many people would have a margin call that they'd have to sell their treasuries to not go bankrupt. So big picture for bond market is super delicious in terms of low risk, high return. But it's going to be a steady grind. You got to think if you're trying to incentivize banks, central banks, hedge funds to buy treasuries for the next 18 months, well, it's not in your best, it's not the best case for the government to let that yield drop too quickly because they haven't even started raising the money yet. So they want to slowly let that grind lower and generate return for the big banks buying bonds, and not quickly. So I do think we have a short-term opportunity to take advantage of massive downside risk in the stock market. And I was waiting for a little bit of a pop. So we got that little pop today, and now we're loaded up. We're set to jet. We won't have to touch this position for the next 18 months. And this gives us the confidence to, again, start buying the very specific companies that will benefit from this crisis. So I think most companies in America will be on life support, and they'll be supported through the government. They're not going to be making increases in revenue or anything of that nature. They might just stay alive, but there will be a few sectors that really benefit from this. And those sectors are healthcare, biotech, medical devices, e-commerce, and then I believe pretty quickly we'll be at war with China and Russia. So I like the military related products as well. So that's the big picture. I got 17 messages. Randy says, what are we expecting for GLD, GDX? No change. Hang on. Rose says, just to share the combat, the you know what is vitamin C, zinc, multivitamin, immune system supplements, and vinegar, salt, vinegar, steam. Yeah. It's kind of like trying to fight cancer with kale. It might help, but it's not. What number of members do you have? We have a lot, Tony. Quite a few. It's been growing quickly. Hundreds. Most have 500,000 to 5 million trading behind us.
Yeah, and Tony, just to kind of caveat that too. So we're only going to allow 1,000 people into the system, period, and then we shut the doors. So that's something good to know too. And we do that specifically for quality control. Jason and I have done the huge company with too many employees and too much headache. Don't want to do that again. Want to keep it small, niche, exclusive community, and that's our goal here.
Yeah. DD says, what if they freeze the markets? Well, then you have more layoffs. So I don't think they'll do that. I think that if our biggest risk would be the Fed. So the big crash. So first we saw the risk parity funds blow out, and they'll probably blow out again when this next big leg comes down, which is why I was inclined to buy the puts. After just analyzing the hell out of it, what I've come up with is that the risk parity funds are not yet deleveraged properly. And so we may see another big run up in the bond market and then a crash because all the margin calls are not out of the way yet. So I think the big declines are yet to come, which is why I wanted to get into these long-term downside bets that we can slowly take profits on over the course of the next 18 months.
Yeah, and great question there, Didi. And just to caveat that too real quick, Jason. So the last time they shut down the U.S. markets, guys, was after 9/11, and it went limit down the next day they opened it up. So that would only be a beneficial scenario for us.
So yeah, there's a lot of people exposed right now. The single most concerning indicator for me is this. Let me show you this is detrimental to markets. And what's bad is this is your single indicator. You need to know that shit is up. Okay, Brian, you might have to edit that little part out. Sorry.
Thanks.
Sorry.
Just kidding.
This is your best indicator. No, there's big problems. Okay. This is bad. Bad. Dollar index is rising as the Fed is printing money at the fastest pace in history. And so that's your single biggest warning sign that there's trouble ahead. Not to mention just the simple fact that we're going to have to be going on and off with turning on and off the economy, not just in the US, but globally. Okay, next question. Let's see. If the 220 put in September, October, and November are only about $1 more per month, it seems like cheap time value to go with the later months. Yes, no. Yeah, I'd agree with that. But I'm not going to be supporting random questions like that. So if you want to get clever, then you're on your own. Deflation. Well, I'm not sure we're going to have deflation. We're going to have limited goods. The cost of labor is going to significantly rise. Supply chain is going to be broken down, and the government's printing money and handing it out for free. So I would be more concerned about inflation. So you want to own gold. But I do believe they'll let inflation run hot, cut interest rates to super low levels, and buy bonds. So I think the way the dominoes fall is first you see the stock market crash, bond market goes to unbelievable highs to pull the resources out of the economy. And then you start to see the government fund all these different companies. Oh, wow, we're already up. SPY is starting to sell off. Well, let's see who got their trades in. Who's up?
I did.
So do you think all this money being pumped in is going to push the market up?
Bond market.
Short term.
All you guys got to know is this. Stock market goes down. Then bond market goes up.
Yep.
Then gold goes up. That's your order. And probably at some point, a handful of companies will do really well because they're going to get a lot of money from the government or just increased revenue. So who's going to really benefit from this? Amazon, for sure. Anybody has some sort of e-commerce business will be a great benefactor of this new environment. And the government's going to force the bond market to generate returns. Otherwise, they can't raise money. No one's going to buy bonds if they're losing value. The yield is pathetic. Okay, no one wants to make 1 3/4 return for 30 years. That's just not viable, especially when inflationary fears are going to be elevated. So really, it's just stocks crash, bonds go up. As bonds start to really take off and the money. So what do we want to see for gold? step one, the government has to raise the money. Okay. They haven't even started. They're still trying to get the bills passed. Step two, the Treasury has to put the bonds on the market and sell them. Step three, the government has to give that capital to the appropriations that have been approved by Congress, and in some cases, legislature from the Senate. Okay, then the money goes into the economy and starts to drive up prices because now there's more money in the economy than there was before at a time when it's more expensive to create the goods. So that's when your gold trade probably plays out. Now, we have a small position in there, and I do intend to leverage into that over time, but that's really the order I see things, the dominoes falling here. Yeah, so we're already up on these trades, guys.
Just the tippy tip of the iceberg too.
Yeah, it's really sad. People, here's what I think is miscalculated right now. Number one, I think people are going to believe that a 50% correction is max. And I think that's terribly wrong. If a $300 billion mortgage crisis that's been, maybe turned into 3 trillion in derivative products can blow up a stock market 50% in an isolated area, just the United States primarily. This is a global catastrophe. So I honestly would not be surprised if we see a 1929 style crash here. So that's one. Two, timing. People think we have a 2-week lockdown. We're going to be back. I got the soccer coach trying to raise capital, or they're trying to sell our memberships for next season. They're not going to even finish this season. It's a joke. So the amount of time we're going to have to be on a lockdown is being severely miscalculated. Here's what you want to do to calculate, to have a leading indicator of how long lockdowns have to be in place. Go to where this began, okay? And I have a good documentary video I could share with you guys where it's just a little lady and her family living the life, the new world in Wuhan. Okay, they're still on lockdown. And the government, if they have 2 weeks with no cases, then they're going to start letting them out of their apartments into small circles. And then if that works for another 2 weeks, they're going to start opening up shop again. So the lockdown period is going to be much longer than people think. The time it's going to take to develop herd immunity is probably no less than 2 years. So we're going to be on and off of economic slowdown for much longer than people anticipate. And you can come up with all the drugs to help solve the pain that this inflicts on people, but it's not going to stop the general fear, panic, and problems that the economy will face. Now, what are some good news for this crisis being over? Well, one really good piece of news is that they're going to create a test, not for if you're infected, but if you've already been infected. So you'll be able to see if you're already potentially immune to the virus. Now, the catch with that is if it mutates enough, then you may think you're good to go and you're not. But just the general problem is that most likely we're going to see severe lockdowns on and off for the next 2 years until a vaccine is created, distributed, and or we create herd immunity. Now, do they let it just ravage through society in a 3-month period and get it over with? Or do they make it go as slow as possible? That's really the big decision that governments have to make. And I think they're going to start off trying to do it slow until the economy is just so crushed and that they're so desperate that they have to just say, oh, well, it's got to just rip through. We've done what we can to create the infrastructure to support this, but we're all going to starve to death if we don't get people back to work. So that's kind of the two big things I'm looking at for the. Josh says, is there an opportunity? Yeah, so that's part of our pro program. that's covered on Thursdays. And that is a huge opportunity. Our members are loaded up on those. So yeah, we are aggressively playing the 30-year treasury. Absolutely. Michael Seebeck, please.
God bless you, Dean.
Thanks, Mike.
I think Tony L has a question.
Okay, go ahead, Tony. Let's do Oscar. Oscar's right in the middle of this mess.
Well, God bless you, Jason.
God bless you too, Oscar.
As I told Dean earlier, oh boy, it's hard to imagine we were going to start to get overwhelmed, but I'm afraid we're at the threshold of that
already. Oh Lord.
Yeah, it's well, cancellation of all elective procedures, and that's dangerous because a cardiac cath is a elective procedure. However, if you find out you've got a percentage of blockage, you need an open heart. We're going to defer those cases, and that in and of itself creates.
Oscar, would you mind introducing yourself to the crowd? We got a lot of people who are potentially thinking about joining the service who don't know who you are yet.
Yeah, my name is Oscar, and I work in the healthcare field down in South Florida. Currently responsible for most of our South Florida operations in a major hospital company. I've been a member.
He's my insider on whether the healthcare system's getting overran or not.
Right. And well, I can only tell you from a local perspective and what I hear from my peers across the country.
And Josh, he's not a doctor, he's the administrator. So he knows the overall flow of what's going on. This,
as Jason can attest, I was very skeptical at first, but he's been spot on from day one. And just the timing's never perfect, but unfortunately he's been correct, and I'm keeping my fingers crossed that we can somehow get our hands around this, but it's starting to become very taxing.
Yeah. Oh boy. Well, yeah. So Oscar and I have been chatting daily about what we're anticipating. And so I was thinking, well, Super Bowl is a good way to spread some, what around. And so I was thinking that California, Washington State, New York, and Florida would be good places to track. And if we saw an overflow of visitors through the hospitals, that would be a good warning sign that the USA would not be spared of this current crisis. And slowly, but forever, Oscar's saying, well, you know what? I'm just not seeing it. I watch all the data coming in all around the world, but my doctors are not saying we have this problem yet. But slowly but surely, they've had a hell of a time trying to. Oh, there's another one for you, Ryan. I'm sorry,
Jason. One of the things that I did mention this morning, and obviously the data is somewhat supportive of it, but not completely. What we are seeing are folks, obviously, that got affected from external factors. A lot of Brazilians, cruise ship workers, those kind of people. The full-time resident in South Florida hasn't begun to hit our emergency rooms yet, and that's what I'm hoping is true. In that the hot weather will defer this, but as you can see in the pictures you're showing, all the hot weather in the world isn't going to stop spreading if you're having mass gatherings like this.
Yeah, see, this is out of Florida. See, the kids just don't get it.
No, and
they just don't get it.
In fairness, we were that way when we were young too.
Yeah.
And, I'm seeing that my daughter is holding herself back from participating. But the fact is, the peer pressure is a lot. Why aren't you here? And all that fun stuff.
Mm-hmm. We'll see most of the young, well, I don't know if that's even true about the young not being affected, but.
No, I'm like I told you yesterday. I mean, we saw, unfortunately, our first pediatric case, and that convinces me that no, they are not immune to this thing.
What was the expected, what was the age on that one? Ballpark?
That was under 10 years old. I can't.
Oh, man.
Much more detail than that, but
Oh, man.
I sit there and say, wow. I mean, now I don't know the details as to this particular person. I don't know if they had comorbidity type issues.
Tony, yeah, they finally started doing it, but I mean, they just partied like it was 1969 the last few weeks, and anyway, it doesn't matter. It's just it's airborne.
Yep.
So in a still room, it travels up to. They have case studies on a bus traveling 15 feet backwards and getting people. If you look at how they're dealing with these cruise ships, you could tell the government knows because they're wearing, there's a lot of signs that it's airborne, not just from coughs, which makes it. Okay, so here's something I tracked a lot last night. This may be a good clue as to what's going to happen next. And I'll post it to everybody. Let me pull this up. This is really the smoking gun, as far as I'm concerned, as to tracking what happened here. Let me pull this up, guys.
And Jason, we had some really good input from Tim. He's works for the National Institute of Health, and I actually didn't know that. I didn't catch that when Tim got signed up, but he's in here and had some really good insight too.
Yeah, let's unmute Tim and let me just show you guys this. Can you guys hear that? Let me share my screen. This is really all. So, okay, so here's what I speculated is, okay. SARS, okay, 1, which we know has been stolen from Harvard for 1, which this little press conference will announce. 2, there's a Harvard teacher whose specialty is nanotechnology combined with biotechnology. So it appears that this is a SARS virus that's been shrunk, which makes it float in the air. And then the inside of it, a lot of people are speculating has a lot of similar genome as HIV. Okay, so it looks like it's a nasty combination of micronizing the SARS virus, which again, we never could create a vaccine. People have been trying to create vaccines for SARS for 17 years, no luck. How did that HIV vaccine go? That's killed 25 to 30 million people. They can't figure it out. So all the hope in the world for a vaccine, I'd be really careful. Okay, let's share computer sound. Okay, watch this. Let's just play this. This is the giveaway, guys.
We're here today to announce 3 separate cases highlighting the ongoing threat posed by Chinese economic espionage and research theft in the United States. First, the arrest today of a Harvard University professor for lying about his participation in a Chinese foreign recruitment program. Second, this morning we have unsealed a separate indictment of a Chinese national working as a scientific researcher at Boston University who failed to mention on her visa application that she is also a lieutenant with the People's Liberation Army. Finally, his office has indicted another Chinese national for trying to smuggle vials of biological material out of the United States to China and lying about it to federal investigators. That defendant, whose entry to the United States had been sponsored by Harvard University, was a cancer researcher at a lab at the Beth Israel Deaconess Medical Center. So, this morning, the FBI arrested Dr. Charles Lieber, the chair of the Department of Chemistry and Chemical Biology at Harvard University, for making false statements regarding his involvement in China's Thousand Talents Plan and his affiliation with the Wuhan University of Technology. The complaint alleges that Dr. Lieber signed a contract with the Chinese university in Wuhan and was paid up to $50,000 per month, plus up to $158,000 in living expenses, and awarded more than $1.5 million to set up a research lab at the Chinese school and work there on researching nanotechnology. Lieber also joined China's 1,000 Talents Plan, according to the complaint, a Chinese government-run program designed to entice scientists and researchers in the United States to share their research expertise with China. At the same time, Dr. Lieber was receiving U.S. grant funds from the Department of Defense and the National Institutes of Health. National Institutes of Health spends up to $39 million a year funding medical research in the United States. Those programs required Dr. Lieber to disclose if he was working with, including receiving funding from, any foreign power. When questioned, Lieber hid his involvement with the Chinese entities, including specifically disavowing any connection to China's 1,000 Talents Plan. Meanwhile, based on the complaint, it appears that China paid Lieber hundreds of thousands of dollars over the years for his involvement with the Chinese entities and for his work on research for Chinese gain. Also today, a federal grand jury indicted Yanqing Ye, a Chinese national, with lying on her J-1 visa application, making false statements to Customs and Border Protection, conspiracy, and being an unregistered agent of the People's Republic of China. According to court documents, Ye is a lieutenant in the People's Liberation Army, but she concealed her military connections while employed as a researcher at Boston University's Department of Physics, Chemistry, and Biomedical Engineering Center for Polymer Studies. The indictment alleges that a colonel in the People's Liberation Army and other military officers from the Chinese National University of Defense Technology gave Ye numerous assignments while she was in the United States, such as conducting research, assessing U.S. military websites, and sending documents and information back to China. In April 2019, Ye was questioned by customs officers at Logan Airport on her way to China. According to the indictment, she lied about her involvement with Chinese military projects. A border search of her electronic devices showed that Ye had compiled information for the People's Liberation Army about 2 U.S. residents with expertise in robotics and computer science. Lastly, last week this office indicted Zheng Zhaozhang, a Chinese national sponsored by Harvard University who was doing cancer research at the Beth Israel Deaconess Medical Center. Zheng was charged with attempting to smuggle to Beijing vials of biological material, along with other research materials that he had stolen from the lab at the Beth Israel, where Zheng was working on cancer cell research. Before he boarded his flight, customs officers discovered 21 vials of biological material in a sock in his baggage. When confronted by the officers, Zheng initially lied and said he was not traveling with any biological or research materials. Chemistry, nanotechnology, polymer studies, robotics, computer science, biomedical research. This is not an accident or a coincidence. This is a small sample of China's ongoing campaign to siphon off American technology and know-how for Chinese gain. Recently, Attorney General Barr referred to China as this country's primary rival. Similarly, FBI Director Chris Wray recently told Congress that right now there is no country that poses a greater counterintelligence threat to the United States than China. Through the use of not only traditional intelligence officers, but academics, researchers, its own private citizens, China is engaged in a massive, long-term campaign to steal U.S. research and technology for its own uses. As demonstrated by these cases, on the academic side, the Chinese government uses partnerships and exchanges with U.S. schools and research institutions to access cutting-edge research and equipment. Obviously, most visiting Chinese academics and researchers are here to work in good faith in U.S. institutions, but some of them are not. Some number have been incentivized by the Chinese government, either through the use of money or other means, to gather U.S. research and smuggle it back to China. Because of the sheer scope of this threat, A year ago, the Attorney General created the China Initiative at the U.S. Department of Justice, designed to prioritize and aggressively prosecute Chinese economic espionage and theft of intellectual property. The cases we are announcing today are part of that effort. Boston is an especially attractive target for this kind of exploitation, and universities and research institutions and tech companies in this area must become sensitized to this threat. Our community benefits greatly from the diversity and talent of international visitors and our partnerships with foreign institutions, especially research institutions. But Chinese economic espionage and theft is a real and daily occurrence that we must begin to confront.
Okay, guys, so that's really your smoking gun. No, this happened a while ago, but you know, if you're looking for a smoking gun as to what's going on.
Sir, on that topic, Mr. President.
Let me get back to that. I'll share that with the group.
Are you looking to step up your stock trading strategies? My name is Charlie Moon, and I teach people.
Good morning. And research in the United States.
But basically, the Chinese were caught with Yeah, this is old. This is old news, but we've been telling everybody about this for quite some time. But there's your smoking gun if you're wondering whether this was what happened next. Okay, so. All right, so let's just summarize. Dollar index going up is very bad. The next crisis will probably be currency meltdowns. Our current trade today is up. Let's see what we're up. Let's see, what's this one trading at right now? Anybody got a current price on this trade right here? The 220, June 20th, 19?
I think it's 1853 or something like that.
Should be up more than that. Let me see.
You there, Scotty?
Oh, hold on.
Here we go. Here comes the tank. But yeah, let's see if we have any questions in the crowd, and then I'll go over our packages.
I don't know, maybe he's working for the CIA or something.
So today's trailer, to reiterate, was a down bet on the SP 500. We're down about $1 or $2. These trades really profit when we crash a lot more than that. So our targets are to close out the first one when we're around 200 SPY, the second one when we're at 180 SPY, the third at 140 SPY, 120 SPY, and then finally we have 3 on the most leveraged one with the most time premium. That would be at the very absolute. Okay, 1830. And what price did you guys get into that option for? How much are you guys up? Tony says if the ratio is more than 1 but less than 2. Yeah, I would use less than more. Okay.
Yeah, I don't know. Which one you're looking at, Jay. I had to look away for a second, but yeah, my portfolio is already up about 0.5% to 1% already to put them in.
Nice. Okay, great. I'm gonna go ahead and review the different programs we have, and then we'll go into more Q&A. But yeah, it's always nice to have your trades start to earn money right off the bat. And again, we're just getting started with the big panic. Okay, so these are our 4 products. We have a pro membership that trades SPY, TLT, GDX, EEM. We do TLT, GDX, emerging markets on Thursdays. So we do have quite a nice set of TLT call options that you can get immediately. So anybody who does join the pro membership, we can send you yesterday's trade alert right off the bat today, so you can get into that position. And we will only manage that on Thursdays moving forward. So that was one change I made just to simplify life. All trades will be based on allocations of 75,000. Now, if you did also take the boot camp trade, you're actually doing really well with a QQQ put on March 3rd, and then an SLV trade we put on the end of February with 1% of our capital. On top of that, in the boot camp, you also get content on Tuesday and a bonus webinar that can go for about 2 hours every Thursday. So again, on Thursday, we do the pro trade alert where we're going to play the bond market, emerging markets, and precious metals markets. And then Monday, Wednesday, Friday, we're trading the US equities market, which is what we're trading today. The boot camp has a second webinar on Thursdays that goes for 2 hours where it's educational. Plus there are speculative trades included. Now, if you just want to join the pro membership, we were up almost 15% in March on our TLTs and call options and position. And then I think it was mostly Bridgewater that actually had to take a huge sell on the 30-year treasury. So we saw it pull back a little bit. That's because he was losing so much in his emerging markets and US equity positions that he was forced to liquidate. So I think that'll come roaring right back. We're just starting to see the TLT behave the right way. And again, there's a set of trades you can place today if you do want to get positioned into the US bond market from yesterday's trade alert. The basic membership just trades US equities, and it's currently down a little bit. We were trying to catch a jump in the S&P 500 by doing the married put strategy. And we we're just one trade away from catching that until I told everybody, let's just step aside. We've been waiting for a bounce in the market to see the VIX get cheaper so we could buy some puts. That happened today. And now we're set to jet. The next plan, again, will be to rotate into healthcare, biotech, medical device, defense, military, and e-commerce ETFs. I have 5 chosen, and as soon as the VIX pops well above 100, we'll start entering into that position. And again, because of these puts, not only can we generate profits with a small percentage of our total assets, it's also going to give us the confidence to buy stocks when everybody else will be in a panic mode. The trades we put on today, again, are relative to your total portfolio. Here's our option page to review what we do offer. So if you are trading a smaller account, the buy and hold portfolio without options fits any investor size. So if you're trading a few $1,000 or less than 75,000, it really makes sense to go with this program. If you have between 30 to 75,000, you can get away with our basic program. Ideally, you have 75, but you could do it with as little as 30. You just have to be a little lighter on those put options today, because I do not recommend going over 10% risk on those puts. If you have at least 75,000, then your best bet is definitely the pro system. The big difference is you get trades related to the bond market on Thursdays, so plus some precious metal plays. And on top of that, we've been shorting Asia equities and doing quite well with that. And I think that's going to do even better. As you can see, it looks like China stole this technology from Harvard and other colleges and universities here in the States and turned it into a weapon. Now, whether it was an accidental spill or by design, that probably doesn't matter now. I think what rolls out between these two governments is really on a collision course now. Finally, we do have a bonus for 30 days. If you buy any one of the top 3 packages, you get our boot camp for 30 days free. This is educational. Tuesdays, Thursdays, you get content. Tuesdays, just an email with videos to watch or a letter I've drafted to read with my market analysis or important videos I think you should study. Thursday is usually about a 2-hour webinar right after our pro webinar is concluded. So this does have some speculative trades that are doing quite well right now as a extra bonus. One of which I think may be getting near, which we've all been waiting for, is to short the Chinese currency. So I think we're finally seeing that dollar strength get out of control, and this could collapse a lot of currencies. In fact, it already has collapsed the Australian dollar by 50%, which is insane. And so that's a $10,000 value for 30 days free. Okay, so let's go ahead and go to Q&A and see what questions we have. Josh says he's up $1,200 since taking the trade.
Nice, Josh.
Good job, Josh.
Yeah, I'm looking at about it's fluctuating kind of between 5,000 and 7,000 right for me. So a year of the membership cost, taking a couple minutes here.
Dal says, report I read said the HIV gene ferments were CRISPR spliced into give a virus super ability against the lung cells. Yeah. Well, there was some reports that got immediately pulled off of the internet, and Zero Hedge had linked to it, and Twitter banned them permanently for linking to this research. So bottom line is, we could speculate all day as to the intent of this, but it doesn't matter. It's spreading. It's unstoppable. It's going to cause economic destruction. And so the way to play the markets is quite clear at this time. Frank says, breaking Kumo orders New Yorkers to stay inside. We're all under quarantine now. Yeah, that's expected. Josh says he's getting his membership, needs his paycheck to clear. Well, thanks for joining the team, Josh. We'll take good care of you. All right, let's see. Does anybody want to talk on the mic? If so, hit the hand raising button so Ryan can find you and unmute you. Sean, go ahead.
I want to know what you think about when the gold related like GDX is going to, take off, or how long we have to wait if you're buying calls on that.
I think I might have gotten into that position a little early. So in the boot camp, I had a 3-page letter describing that gold bugs might be a little bit early. So I don't mind having a small position and a small amount of risk. But I think that what has to happen is, first, the government must raise the capital to deal with the crisis. This is going to have all the central banks teaming up. Guess what central banks can easily manipulate? So easy. Gold market.
Okay.
They can easily. So I think step one, government's going to start raising 3 to 4 times per month what they usually do. And that's going to be destructive to all other markets. Because if we have limited resources in an economy, we don't have this pipe dream that there's just free resources, but that there's limited resources in an economy, and we're going to force all capital into government bonds. Well, that's going to be destructive to all other assets. Okay, so the government has to raise the capital, then redistribute this. What are they going to do with the money? Well, they're going to bail out people. Okay, so we're going to be giving people who are not working free money. 1, 2, cost of labor is going to go up. People are scared to work. Okay, so we're going to have supply chain. So anyways, bottom line is, I think we're a little early on the gold position, and it may take some time. We need the money to get raised from the government, hand it off to people, companies. This is going to create inflationary pressure over time, and then you're going to see your gold market start to do well.
That is obviously after the TLT has spiked.
I think so. So my strategy is to have the married put on the GDX. So I have 2 months of protection. And then I'm slowly getting GLD calls whenever I think it's too expensive to buy TLT calls. So that's, I think bond market's going to dominate returns outside of shorting equities in the next 12 months. So gold bugs might be really, really early and in for some pain. So risk management's critical here. I have very limited risk. With all of my gold positions combined, I can lose no more than 1.5% of my total portfolio in the next 60 days. Period. Okay, so I'm not taking a lot of risk on the gold market yet. It makes sense for gold to go up, but you got to realize central banks, they have all the gold. They can manipulate that. They want to force investors into bonds, period.
Okay, thanks a lot.
You're welcome. Oscar.
I just wanted to wish everybody the best of luck. And Jason, thank you for all the hard work you do. And for those of you that aren't part of the service, do yourselves a favor and get the peace of mind. These gentlemen work very hard, and they're not right 100% of the time. Nobody is, but gosh, they've been calling this whole situation since the inception. And trust me, I'm the king of skepticism. Do yourself a favor. Join the service, and I wish you guys the best of luck and good luck, and God bless.
Thanks for your service protecting us, Oscar.
Thanks, Oscar.
I was going to say, he may be the king, but I'll be the queen of skepticism, and I concur.
No, we've nicknamed you the queen of Spankum.
That's right.
Thank you, guys.
God bless.
Thanks, Oscar. Have a great weekend, bud. All right, Kathy, it looks like you are up next. What questions do you have for us?
Thank you for being hard and telling us to sell the stupid equities.
Oh, you're welcome.
You're welcome.
That was probably worth it alone, huh?
Well, being able to sleep at night's not bad either, but it was just the right thing. My husband said, "Why did you change services?" And I said, there was just something in me that says I needed to look around. And I did your trial and did the paper trading part. And it's got such good flexibility. Sorry about that. I've got a tiny little account for my daughter that I'm using to buy and hold. And that's sweet. And then doing the pro in my husband's IRA and trying to get myself little bits in some other accounts because it makes sense. And yeah, my puts for today are up a little bit. So that's nice.
Yeah, so these are some pretty leveraged bets on the crash here. So we'll see the big return when and if the market does really crater here.
And the other thing is those Thursday trades, how sweet. And my default from my old days was 10 contracts. And that's not what I should be doing right now. I should be doing one contract. And I accidentally bought 10 contracts of one of those sweet trades.
Nice.
And so I closed out half of it. It paid for the trade. And now I'm just holding on to the other half. So thank you guys and take care. Stay well. We need you.
Thanks, Kathy.
Thank you, Kathy. Appreciate it. All right. Michael Seebeck, looks like you're up next, bud.
Hi, good morning, all. This might be a stupid question.
No such thing.
The parity names, Jason, that you mentioned, the parity, risk parity names. What could you just tell us what those are? What you're referring to there?
Yeah. So Bridgewater's the biggest.
Yep.
Okay.
Bridgewater, Citadel, and Millennium.
So Citadel and Millennium are a little different, but they cut some losses. I think Citadel has like 150 little pods, and there's this like just ruthless guy. If you lose money, he fires you instantly. Anybody related to it. So those three big funds, we're responsible for having to take money out of the treasury market, amongst a lot of other people. But yeah, risk parity is the people who are using. There's a good Zero Hedge article. I'll post it.
Okay.
And but yeah, they're using about 10 times leverage, 8 to 10 times leverage, and they're just going back and forth between bonds and stocks.
Okay. Thank you.
You're welcome.
Great question, Michael. Okay, Josh, looks like you're up next, bud.
Hey, thank you guys for everything you do. You know, I'm just waiting for my check to clear. Then I'm gonna. I haven't decided whether to get the pro program or the regular program, but one of the two I'm getting for sure. You know, my question is a couple things. One is with gold. From the limited stuff that I've seen, it seems like traditionally when markets crash, that gold seems to sell off with it. I don't know if this is because institutions are selling their only profitable asset in order to pay for margin calls, or
real quick. So if you think stocks are crashing, you buy bonds. If you think inflation is rising, you buy gold. So QE is the signal to start getting into the gold market.
Mm-hmm.
Okay. Economic GDP slowdown is the cue to get into bonds. So don't buy gold because you think stocks are crashing.
Got it. That makes a lot. Wow, that's great information. Thank you.
You're welcome.
And then, okay, that makes a lot of sense. And the other question is, what about the commodity market? Like with the, equities markets crashing and everybody going into panic?
Yeah. So we also want to buy some. So in the pro program, we're also going to pick up some American oil and gas companies once we think the real bottom is in.
Got it. Okay, makes sense. And maybe even like, I'm guessing the emerging markets would cover like alternative energies as well.
We're just shorting China with the EEM and all of Asia, not just China. So I want to buy that for cheap as well. But right now we're buying puts on emerging markets. We bought one a while ago. It's up over 1,000%. And so no trade on that. Here's the trades I have coming up for investors. Okay. So right now I just issued some put options that are already slightly up, but we need a big move for those to really materialize. So that's step one. Step two, I have call options and a large TLT position, which we cover on Thursdays. Now, if you do join the pro program today, we're going to send you yesterday's alert. That's the same alert that we're going to be giving every Thursday for the foreseeable future, because it gets you positioned for a big move in the bond market. So that's step two. Step three, we have a boot camp trade that's still good. It's not the QQQ put. That one's already paying off in spades. But our trade alert on the silver market's doing well, and it's only up something like 35% so far. So I still like that for boot camp members. In the Monday, Wednesday, Friday basic program, which is this program, we have the SPY puts you put on today. That sets you up for the next 18 months. And we're going to start picking up very discounted equities. And we're going to be looking at healthcare, biotech, medical devices, military, and e-commerce. Okay, so that's kind of the domino effects. We get a stock crash, a bond rally. We're going to pick up stocks on the cheap, and we're going to slowly leg into a gold position. So that's really the order. So step one, stocks crash as bonds rise. Step two, we're going to pick up some cheap equities in industries that aren't going to be destroyed by the slowdown. And then the last step is to slowly leg into that gold position. And at some point also, when we're buying cheap equities, would be the same time we want to buy likely cheap oil and natural gas.
That's wonderful. That makes perfect sense. Thank you.
Murray, the puts are in place to protect us against someone like Ray Dalio blowing out. So we want the TLT to appreciate greater than the cost of our put. So I have no intentions of selling that put. We learned our lesson the hard way last Monday when we were at 180, and we should have been probably at 200 by now. But guess what happened? All these risk parity funds blew up. So I'll be looking at longer duration TLT call options, understanding that there could be volatility in the bond market, one. And then two, for that put, that's our protection, because you have about half of your total net worth invested in the bond market right now, Murray. So it's worth it to have that put and just let it provide that layer of security we need.
Yep. Excellent explanation, Jason.
So if the TLT goes up, Murray, you're going to make so much money with that massive call option position you have, plus that massive TLT position, that it will more than pay off the cost of your put.
Thank you, Jason. That's great news.
Yeah, yeah. And Murray's got like twice the exposure, so he's going to really clean up.
We'll see what happens in 2 weeks and 3 weeks, but we can save thousands of lives and even millions of lives.
Do you have a question, Jack?
Yes, I have a question, Jason. How is it related that Chinese government own a lot of treasury, U.S. treasury? Are they going to dump it? And is TLT still going to go up?
They're not going to dump it. If they dumped it, they would be self-destructing their own economy. I've done a lot of research. There's no way.
No way. Okay.
First of all, they don't have enough to dump. Second of all, the treasury will buy it. So yeah, I don't think they will. One, because then they can't buy any products. Two, that position is making them so much money right now.
I see.
The dollar index, we don't really equate this as a profit, but you guys got to realize when I put you guys into cash, remember cash is trash. Gosh, that'll go down in history. Well, the value of our currency since I put you into it has gone up considerably. If you compare it to the Australian dollar, you have twice the buying power as you did just a month ago. So the dollar is just destroying foreign currencies right now. So that's giving us more buying power to get into these other assets.
Thank you.
Yeah, absolutely, Jack. And Jack, are you still just on the basic, bud?
Yeah. Hey, how much is the pro?
Well, we'll see what you initially paid for the basic, and then we'll just apply it to the total cost of the pro. Okay.
Okay.
And anybody who gets the pro, we're going to send you yesterday's trade so you can get the full position built.
Yep.
Because the TLT is already up 5% today. So it's still a good trade. There's plenty of time. You're going to be getting in very close to the same price I did actually today. So it's not too late to build the TLT position. Josh, yeah, they haven't been dumping treasuries. They've been desperately hanging on to them and selling them to keep their economy alive. Because you got to remember, they have to buy everything with really with dollars. So if they run out of dollars, they can't buy anything. Nobody wants their currency.
Yeah, that makes a lot of sense. I have a question. What about selling options to secure profits, but selling options like, for example, if we buy 160 TLT that expires next year, what about selling a shorter expiration to secure profits? You know what I mean?
Well, the reason to do a spread is if you want to really leverage in and use a greater quantity. But I'm not doing that. I'm just buying the calls.
Got it. Makes sense.
It's not a bad idea. And just you're going to make a lot less with a lot more complexity by selling. Because if we think TLT I think TLT is going towards 300 in the next 2 years, which insinuates that we're going to have the 30-year treasury get close to 0% yield. Let's go with Roy.
Roy, how much money did we save you so far? That's my first question, real quick.
Well, I'm not following the program. I had my money in transit ACAT while I was on vacation, which was the worst week ever to do it. So,
man.
I'm still fighting my way back, but overall, the trades that I'm following or that I've done have more than paid for the program.
Very nice.
Yep.
Awesome, Roy.
And I'm one of those that you're going to laugh at, but I love my equities, and I'm kind of attached to them. So I know, laugh all you want. I don't care. I love them.
Well, if
So-
you put those puts on, at least you'll be protected, right?
That's what I'm doing, yes. So quick question, I've joined late. Had a meeting, watching my corporation fall apart. On the one put, is the date wrong, the September 19, 2020?
Yeah, I fixed that 18
Okay.
typo on my end. I apologize.
All right, cool. That's all I needed. Thank you. I just
Yes,
wanted to
sir.
make sure I wasn't looking at something wrong.
Yep, great question, Ray.
Thank you.
And great job. Already paying for the service. That's
Yep.
your weekend, Roy? Right?
Yes. Yep.
Nice.
And I just got access to the funds, so
Oh, baby.
happy. I'll eventually sell the equities, but right now it's just a hard pill to swallow.
Well, next thing you know, we're all going to be in a lockdown and economy's going to collapse. So that's all I'm going to say on that.
I heard that through a supposed inside source that I don't know is reliable or not, that it's going to come on Sunday-ish. But that date's still moving, and it's about a 2-week lockdown. But the government just sent something out saying that they were not going to go on lockdown.
That's almost a sure sign it's coming. Once they
Yeah.
start even talking about it,
Yeah.
then you start having to question.
Mark.
And Mark, thank you once again for the referral to Roy. And just while we're on that, guys, if you refer a customer over to us, we will send you an Amazon gift card. Okay. So please, guys, bring us your friends, bring us your family. It's, the referrals is the best way to work with people. And, there's a lot of people out there that just don't understand how much capital is at risk right now and how ugly this is going to get. We would love to help them out too. Okay, I think Jason had to step away for just 1 second. He said he's going to be right back. Let's see here. Josh said, such clear and concise answers and info, exclamation point. Awesome. Thanks, Josh. Appreciate it. Oscar says, so all you need is 7,500 for the pro. Oscar, it's 75,000. Okay, for the pro. And then as you can see kind of on the screen, per 75,000 is going to be the tranche that we use. So just real quick, guys, on the options that are available to you as an investor. Okay, buy and hold. Most people that are using that are 20,000 or less, but we do have people that are using a couple 100,000 behind it as well. Okay, now in the basic system, that's really good for people that are kind of between 30,000 and 75,000. Okay, just a nice little kind of mediary. And then for people that are doing the pro, you have to have a minimum of 75,000, but we have people with 75,000 and well up to in excess of $4 million using that program. Okay. So that's kind of the levels and how you can fit into each one of those ecosystems, and look forward to helping keep you guys safe, your money safe, and also profiting from this stock crash. Okay. Dal says, how about an Amazon call? Yeah, Dal, we'll certainly be legging into e-commerce, but the time is not even close. Okay, but our pro members will be legging into, basically we're going to, our first step, guys, is we're going to get into healthcare, and we're going to get into e-commerce. Okay, possibly some biotech, possibly some medical device stuff. Okay, and we'll actually be doing that before we get back into the SPY. So we're going to use that to kind of get a little alpha, and then once the coast is really clear on the SPY, then we'll get back into the SPY. So Oscar says, what if you have 20,000? So the buy and hold portfolio would probably be best for 20,000, Oscar. Okay. And that portfolio did 23.13% last year, and the max drawdown was 1.6% when the S&P 500 was down up to 7%, within a month's period last year. Okay.
Yeah, it's funny to tell people our buy and hold had the best return last year. So in a bull market, our strategy is really pretty just hands-free. In a bear market, all of a sudden options are just give you an unfair advantage. So yeah, if you have the capital, you're going to want to use options in the face of a catastrophe. But this is our buy and hold return.
Yeah, and
But again,
Oscar,
that looks so sexy, but again, that's with rates going lower plus a bull market in stocks. So treasuries and stocks just really complemented each other the entire year. This year is obviously much different. People are losing fortunes, and now you want to use options very aggressively to protect capital and to speculate on down moves.
and
Yeah,
just
Oscar, if you go to Interactive Brokers, they'll double your capital for a low interest rate. So you could probably get away with the basic program. I don't think you quite have the capital to pull off the pro. If you did the pro, Oscar, you'd just take the call options and ignore the ETF position. So you could go into this one and just trade the call options and the put options and ignore the underlying assets. Would be the only way to pull that off. Oscar says he has a good job, so he can add to it as he goes. And they're going to be handing out money like it's the government's going to have to incentivize loans, and because of all this. Somebody asked about Amazon calls. So our e-commerce ETF is 25% Amazon, and so when the time comes, I will buy that. My concern with Amazon is what if they run out of supplies because China cuts them off? That'd be bad for Amazon. So we don't know if it's going to turn into a hot war with China or not. But that Harvard video I sent you would indicate that most likely this is going to turn into some sort of
And so, Jason, just real quick, I did post for the trial members. There's a post I just put in the chat box, guys. If you want to click on it, it says trial members. We look forward to helping you protect and grow your nest egg in this market crash. You can gain access by signing up from this link, and it's portfoliobuilder.io/options. Okay, and cheers to your success. And once you click on that link, guys, you're going to scroll through kind of just a big wall of testimonials of all of our members that have said, what they thought about the service. So just scroll down. And for Oscar specifically, if you were going to pick the buy and hold portfolio, Jason, do you want to just show them where that would be on the page real quick, just on the screen? There you go. Cool. Yep. So just scroll down there, Oscar, click that button, enter your information, and you'll be all set. Okay.
Do you have a question, Gary?
Yeah, you may have already covered this, and if so, I apologize. But yesterday in the boot camp, Jason mentioned something about giving us a link so we'd be able to learn how to enter data into the spreadsheet.
To the platform. Yeah, we're going to get that out right after this webinar concludes. Okay.
Okay. All right. Thanks a lot.
Gary's in the boot camp. Part of the boot camp, guys, is we're going to teach you how to use our platform. So if you like the way I can report profit loss, it's easy with this platform we've designed. So you get your own spreadsheet and we teach you how to fill it out. Plus, as environments change, I optimize the underlying assets. So let me just show you. Well, I can show you guys. So we're about to roll out a brand new spreadsheet template that will take advantage, because last year I would have never guessed that we're going to have a once in 100-year pandemic that's going to just devastate economies for probably 2 years. I wouldn't have guessed that. And I wouldn't have guessed that we're going to have trillions of dollars being handed by the government into healthcare, biotech, and that there'd be good reason for Amazon to not just do as well as it has for the last 10 years, but probably twice as well. So it's just changed the landscape. So what's neat is we have the software that I designed the template, and then I can clone it to all our members, and it helps you track your returns. So we're looking at some point, getting these US oil and gas companies for pennies on the dollar. And in the US equities, here's the ETFs we're looking at getting into as the crash unfolds. So in the boot camp, you actually get the detailed education on how to fill this out, among a lot of other content. But this is where I think you're going to see the best returns in the equity market after we hit a bottom and as we see the government fuel these different specific companies.
Do you have a question, Mohammed?
Yes, and John, I'm asking about buying calls. When you buy the call and the asset goes up, the volatility gonna drop and the value of the call gonna drop as well. How do you think about this?
So,
well, there's two different ways it goes up, but yeah, if you go above the strike, you're in the money, and all of a sudden that implied volatility is not so important. And so yeah, I wouldn't worry about that. Our call options are doing very well.
Yeah, and we put out put options today, not call options.
Now for TLT, you're buying long out of the money option, isn't that right?
No, we're buying near the money call options on the TLT at the money.
At the money. Okay. Yeah, I'm talking about TLT because we are going to go long on that, as you indicated. You want to buy call on those. So
yeah.
Yep. No, we're very long TLT.
So is it better to buy deep in? Is it better to buy deep in the money, which it costs you more, if you buy deep in the money TLT?
The best thing to do is follow the trade alerts. So I'm carefully choosing the best strike. So if I think that it makes sense to do a out of the money call, I'll give you that. But currently I've been giving out at the money calls. So I think we're going to have a modest slow growth in the TLT because that's what the government needs to ensure they can raise capital for the next 2 years. So they really don't want that yield to drop too quickly because then investors might think that there's no more room to go, and thus they won't be able to raise the $1.3 trillion stimulus plan that they just passed or are trying to pass. So I think we're going to see a vicious drop in the SPY and a gradual rise in the TLT.
Mm-hmm. Yeah, good thought. Thanks.
So I like to buy out of the money puts and near the money calls. Out of the money puts on SPY, near the money calls on TLT.
Yeah, okay. Thanks a lot.
You're welcome.
Absolutely, Mohammed. And Mohammed, just real quick, how much capital were you looking to put to work, or how much do you have to work in the market currently?
Around about, I have around 55,000.
Okay. Yeah, so the basic program would be a good fit for you, definitely.
Okay, thanks a lot.
Absolutely, bud. We look forward to helping you profit in this unfortunate situation. Okay, let's see here. Joe Campbell has a question.
Hi, fellows. I just signed up with you for the more advanced, the pro program. And today I heard you mention a boot camp trade, something to do with silver, but I didn't see that trade. If that's still a viable trade, I'd like to get that information. That's one item. And we can do this offline if need be. And the other one was, there was also a mention of married puts on the GDX. And that's not, I haven't gotten any information on that either, but I've actually only gotten probably two or three trade alerts from you. So it may have been before I became active.
Okay, great. Yeah, I'll send you, I'm gonna have Ryan send you yesterday's content, the boot camp and the trade alert, and it covers both of those aspects.
Perfect.
In detail.
Thank you.
Yep. But good question. And yeah, we'll take care of both of those. So there is a trade that I like for the boot camp that's viable right now. It's the silver trade with 2 years time premium. And that trades up a little bit already. And the boot camp does a good job telling you how insane that down move is on the silver, which is surprising that we're up. So we bet up on silver. It crashed so hard it made the implied volatility turn our trade into a profit. So that trade's better than it was before. As far as the married put, yes, the general recommendation was to buy one strike above the trading price, a put with 60 days time premium. So I have the 23. I'll just show you that so you can see that right away. So considering we're a little lower, I would personally do the 22 instead of the 23 today. But I have 515, 23 strike long put to cover every 100 shares of GDX I'm holding. And that limits my downside risk for the next 60 days. So I can have this position without so much risk. Oscar, yeah, the basic program is trading the US equity markets. So that's the put options. GDX are gold miners. So that's primarily American Canadian companies that mine gold. So the Thursday trade is where we cover emerging markets, the bond market, and the precious metals market, where we'd also consider getting some oil and natural gas once this really turns into a full-blown crisis here. But the big panic's not here yet. We're not there yet. And these are all hedges to protect right here, guys. This is actually our best performing portfolio to date. So I also break it down we had a 73% return in this portfolio last year, but it's only 10% of the capital. So I'm willing to have a lot more risk to ensure we get the greatest profit. Yeah, if you upgrade later in the future, Oscar, we'll discount what you paid so that you don't have to buy things twice. And also there's a bonus where you get 30 days in the boot camp when you join any one of the advisories. Now, if you go straight to the advisory, we're going to give you a free year of the pro. So if you just want to get the boot camp to start, we throw in a free year of the pro. Yeah, sure, Oscar, of course. Joe, you clear on the married put?
Well, to be honest, I'm not quite sure. I was just
tell me this: how many shares of GDX you got, sir?
I think it's 600, I believe.
Okay, so if I was in that position that you are, here's what I would do. Let me pull it up. So if I had 600 shares of GDX, I would have 5 puts with the expiration of May 15th. And a 22 strike instead of the 23 because it's gone down a little bit. That's what I would
so you're buying the standalone put and not actually inputting it as a married put.
Right, because you already own the underlying, so you just need the long put to protect.
Okay.
So
I got
the bet on that is that you want the underlying to go up more than the cost of the put in the period of the put option. So we have 60 days and we want it to go up above 25, 30 to start making a profit. Now I'll be less defensive on those puts as soon as I think the gold market's really going to get into a big run up. Now, long-term, I think gold's going way, 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 way higher. Usually, you got to realize, usually central banks do rate cuts first, push all the money into the bond market, pull it all out of the stock market, redistribute capital to try to plug all the holes in the ship. And then once the problem is alleviated, then they do quantitative easing to vacuum up all the bonds people don't want. And that creates inflationary pressures and gold goes up. This time, the problem is so severe that they're doing rate cuts and QE at the same time. So the playbook of waiting around for the crash to be over for gold might be incorrect this year. So I think we might see gold start to run up sooner than we have in previous crises because they're doing QE as we speak. So I'll be tempted to gradually increase risk in the gold market and decrease my downside protection as I get confirmation that investors are piling into gold. Now, that's the big picture. What's the risk in the gold market? It's the biggest players are going to make it look like an ugly trade for as long as they can to force investors into bonds, because that's what countries need to survive. They need to allocate resources. The problem that we're facing is too large for private banks to deal with. It's just too massive. So they need the government to intervene. How do they do that? Well, the government has to pull resources out of its economy. And in the United States, we like to pull resources out of everyone else's economy. So our little secret for raising capital is to go cause destruction in other markets, which forces them to buy our debt. That's the big thing that US does. Why do you think we spend more money on military than anyone else? Because we're the big bully that goes, shakes up all the other markets and gets all that money to flow to the US debt products primarily, and sometimes to the US equity markets. So all the money is going to be forced into bonds. Once that money has been allocated to the government, they will begin to redistribute it as they see fit. So it's going to come in the form of handouts to people who are unemployed, bailouts to small businesses that are going to have low demand, but are important to the economy, and also bailouts to oil companies, bailouts to airlines, bailouts to you name it. Just about everybody's going to need a bailout. The only people who are probably going to see revenue and profit growth are a small group of companies, which I believe will be healthcare, biotech, medical device, e-commerce, and I think the military-related stocks are going to do very well also, because I think we're going to war with China and Russia in the near future. So stock crash 1, bond market rally 2. A few sectors do well in the stock market. Most do not. Most will be kept on life support. Inflationary pressures make their way into the economy as we're printing money with higher cost labor. Supply shocks. So you're going to have plenty of inflation. That's going to finally drive gold up. So I think that's the order. Stock crash. A few companies do well. Bond market is going to go up for a long time because they're going to raise money until this problem's solved. And as that money works its way through the economy, at the same time as the cost to deliver goods goes up, you get inflation and you get that nice little spike in gold. And then all of a sudden the Fed has to hike interest rates and everything comes tumbling down. So 1965, 1980, I'd say we're about 2 years before 1965. Or maybe right at 1965 in the kind of environment we're heading into. So go do your research on Paul Volcker, the runaway inflation of the 70s, and maybe go study the 1929 stock market crash. Look at the Spanish flu from 1918 through 1920, and then go do a little research on how successful we've been on vaccinations for SARS and HIV. And once you put all that together, you're going to realize what a mess we're in and that you need someone who knows what they're doing to help you navigate what's coming up.
Yeah, awesome questions, Joe. Beautiful questions. And Jason, he signed up on the 15th too. So he did miss the GDX put and the silver trade.
Okay,
but
well,
we will get those to you, Joe.
Yesterday's trade covered it in detail with both.
I actually placed the GDX trade while I was listening.
Nice.
Okay, good. Well, yeah, review yesterday's video. We're going to resend it to you because I went over it twice, head to toe, of the married put strategy for GDX. So again, it's just the idea is you want to go one strike above the trading price, 2 months time premium, and that protects you. It's called the married put. You already bought the underlying, so you just need the put. The boot camp replay covers the trade I like right now. And I was going to officially alert it on Tuesday. So if you want to jump into it now from the content in the webinar from yesterday, go for it. If you want to wait for Tuesday for the official trade, then go for that as well. Let's get Galaxy S20. SPY's getting a little weak here, not 237.
Did I hear my name? I'm sorry.
Hey Karen, how's it going?
Oh, it's fine. I was trying to hear quite a bit of the speech at the White House while you were making
what
your
are they
presentation.
saying?
Oh, it's been very fascinating. Some fireworks, you know, a little bit, but you know, they're just moving right along. They're trying to get the. I was listening to the Q&A with the all the reporters, and Dr. Fauci's face was pretty funny. It was worth watching just for that. So you might have to take a look at a replay on it. It's pretty good.
Yep, we'll definitely have that on the list for today.
Yeah.
Yeah. A little weakness on the SPY. You guys getting any? We need a big crash for these SPY puts to really kick in, but you guys should be up a little bit.
Yeah, I this thing was running away from me a bit, so I've been watching this. You know, it's SPY's going up and down, and all the puts. It's madness today. So I know what you say, but you know, it's crazy right now. So I've been slowly trying to work into them, but it's you know, these numbers are crazy. Yep, I'm working it slowly but surely.
Nice, Karen.
You got it. I keep with the program.
Trade today.
I keep with the program.
Awesome, Karen. Okay, let's see. In Galaxy S20 Ultra 5G, did you have a question? And I want to say maybe off memory that might be Moses. Moses, if you're out there, bud, go ahead and unmute your microphone and ask any question you may have. And just guys, while we're here too, please, any additional questions, please reference them. You know, the webinar is by far, you know, the best time to ever ask any question, whether it's, you know, related to what we're doing and why, the markets, our positions. Okay, this is why we dedicate our time here, literally in the webinars, is to just answer any questions you may have. Okay, and also for the people that are just on trials, to answer any questions they may have. It sounds like we kind of got through kind of a good mix of both, you know, clients of ours and also people on trial. But please, guys, don't hold anything back. Tony?
I just want to say something to that, Dean,
Sure.
for anybody who's on trial. You guys absolutely give so much of your time and effort for people you know, for this trial. Just to try to answer in the understanding. I've never seen that ever before. And I can't tell you how much that is appreciated, even though I've been around a while and I know your methodology. I find that extremely refreshing. And I think everybody who's might be new out there should, and they should understand that, you know, you guys have a huge amount of research that you do. I mean, you know, I always banter with you guys, but that's just me.
Yeah, hey, I'll second that. I have said it before and I'll say it again. These are the hardest working guys in stock market advising that I have met. And I have signed up and seen and looked at a lot of different services. And there's no question these guys work harder.
Yeah,
Definitely.
I mean, you know, and
I agree also.
Absolutely.
Yeah, I love y'all
Same
too.
here. Hey, watch out.
And when we
You're gonna
can
give them the
hug
big
and
head.
give each other
Not
kisses again,
careful.
we will.
I will say this. I was an old time dividend guy. Had it not been for these guys in this program, I'd probably be down 30–40% today, and I'm up. So hats off to you guys. Appreciate your service.
Thanks, Donald. Appreciate
Don.
it.
Thank you so much, Donald. We love working hard for our clients, and it.
You guys do. You work.
Oh,
I don't.
okay.
I don't know how you work so hard, but thank goodness you do.
Okay, I want to address Anwar. So Anwar, you're not following the system, my friend. So Anwar's complaining he's down, but he took tiny bits of the trading system and doesn't follow the alerts. So it's hard to support him. Let's just do this, Anwar. Let's unmute Anwar right now. Okay, so I can only tell you the same thing so many times. So do we have Anwar live?
I'm here.
Okay, good. Let's mute
Just want
everybody else.
To understand that everything, I done everything you told me to do the other day.
Okay, well, let's start. Okay, tell me what your portfolio looks like right now, and we'll see how well you're following the system.
Let me go there. Okay. In regard to TLT, I own 1,500 shares.
1,500 shares, okay.
164.5.
Okay.
When I have a call, thanks for taking the call. Let me close the door here.
And by the way, when we told Anwar to sell Microsoft and Alibaba, he saved over $150,000 so far. So
no, not that much.
Just from that alone, we saved you 15 years of your subscription costs so far, just from telling you to sell. And it's getting ready to tank hard right now. So
but I'm not talking about those. I agree with you. I saved money, but not that much. But
$150,000 plus from what you did sell so far.
For 1,000 shares of Microsoft, and I didn't make that much. Anyways.
Well, you didn't lose is what we're trying to point out.
Okay, yes. I like to learn your program. I know you just...
Okay, so let's see. When did Anwar join? Can we look that up? So if he was following the system, let's see where he would have bought the TLT.
Probably a month ago or less.
Okay, so
the 6th, Jason.
Okay, so if Anwar was listening to our advice, he would have bought TLT at 142. Instead, he waited till it was at, so he should have at 142. So the very first thing we've told Anwar to do is sell stocks. Let's just see where the market's crashed from since we told him to sell. Because some people come in and they're, I'm losing money. But if you're not following the system, then it makes us look bad, but then it's really your fault. That's what I want to point out here. So we're going to do two things. We're going to do two things, Anwar. We're going to review what you did wrong so everybody can learn from it. And we're going to try to make sure you follow it correctly moving forward. Does that sound fair? Because if you want to come on here every day and complain about losing money, but you're not doing it, I understand.
I did it. My portfolio is large, and I did what you said regarding TLT. I waited a little bit. It's hard.
Okay, so we told him to sell stocks right here when he first joined. Okay, let's look at the crash in the S&P 500 since we gave him the sell alert.
Oof. Good Lord.
Okay, so we saved you. If you listen, you've saved 30%. So we saved you 30% since the sell alert on your stock portfolio. Now, Anwar has $2 million in the stock market, at least he used to. Okay, so that alone saved you, if you had listened, $600,000. Okay, that covers the cost of our subscription for 60 years.
That's more money than I've made in my whole life.
Okay, Anwar, so if you're listening, first of all, you would have saved $600,000. You didn't do it. You've slowly been selling stocks, okay? So can you agree to that we told you to sell it way back and you're slowly starting to do that? Is that correct?
That's right.
Okay, so step one, we told you no stocks because there's a stock market crash coming. So he did part of it. I've been trying to give him the confidence to do it. Anwar doesn't want to realize the loss. A lot of people have this psychology, and this is a good lesson for everyone, Anwar. A lot of people think an open loss is different than a closed loss. And I'll never understand why, but that's a mentality of a lot of people I've talked to. So I get that. I feel it for you. let me ask you this. Do you still own equities?
Yeah.
Okay, so I've been telling you on every webinar for a month straight that I don't recommend owning equities. And so far that would have saved you $600,000. Tell me, when did you sell equities and how much do you think that saved you so far in terms of losses in your account?
I could go back to history and let's see.
Because really the biggest value we've really provided people this year is telling them to get out of stock so you don't lose your entire net worth, which is what's at risk right here.
But as another caller told you this morning, I cannot sell my equities, and I'm somehow, I agreed with you. I obeyed your orders, if I could say, and I sold some. Like I sold Johnson & Johnson. I sold.
Johnson & Johnson's the company we're about to buy.
Yeah, so this is the guy that actually sold his equities. I'm in a position just like you. I lost about $1 million in the past week. And I'm fighting my way back in. I'm stubborn. And I'm doing half of the system, and that's my fault, 100%. The trades that I have executed with these guys, I'm up in. A couple are underwater a little bit, but they got a lot of time, and that's just the way the game is. The game's the game.
Okay.
I don't understand what the deal is.
Thanks, right? Yeah.
So you lost $1 million.
From
my portfolio went down $1 million. I sold out of a bunch of stocks that I knew were bad, and I moved that money. The ones that I could stomach, the other ones that I kept were the 3 Fs: fighting, fucking, and food. And they're always going to be good. Okay. All the other ones I got rid of, and I started building this portfolio. I'm only in it a week, and so far it's working out great.
What are you up, Roy?
I partially agreed with to do what, and I bought TLT, then TLT.
Okay, wait, Edward, wait. You joined on the 6th. The first instructions was to sell all stocks. You have $2 million of stocks. You would have saved $556,000 so far. Okay, so that's step 1 that you failed to do. Okay, step 2, your instructions were to buy the TLT. The TLT was on February 6th at 142. Okay, so let's look at the return you would have had if you were following the system.
I wasn't with you on February 4th.
Okay,
March 6th.
Let's just say you waited a while to make a decision. Okay, so TLT's gone from 144 to 157. Let's see what that return is.
Yeah.
Okay, so you should be up. You should have saved $600,000 on your stock so far if you followed the system. And then you would have had, what would that be? $800,000 in the TLT would be up 8.6% right now. Okay, so that's what you should have done.
Okay, I didn't, but is the TLT going up? That's my question.
Yes, I like the TLT. So let's see where we're at now. So you have 50. So the price you pay doesn't matter for following the system. The system is a risk management system that pays attention to big moves, and it controls your risk and looks at what's coming in down the pipeline. So you have 1,500 shares of the TLT currently?
Yeah.
Okay. How much stock exposure do you have? In just dollar amount. How much dollar amount is your stock exposure currently?
Mean all the stocks?
All the stocks.
No, I went down quite a bit like the other gentleman, and
Let's not count what it used to be worth. Let's say, what is your stock exposure right now?
Let me add up a couple. 1.2 million. I lost about 800,000. Not lost, paper. So when you tell me just get rid of them, that gives me a heart attack.
Okay, so let's just start here. My strategy that we've been telling you for a long time now is to own no stocks because a massive stock crash is coming. Anwar sent me this video that I've seen. A lot of Persian people follow this fellow. A friend I have in Albuquerque was was passing around. The first thing that fellow says is that I don't know anything about biology. And he goes on talking about the crisis unfolding. So I don't know why on earth you listen to that guy. But so my trade alert to you, which has been the same the entire time, has been to have 40% allocation to the 30-year treasury market and zero, not 5%, not 10%, not 20%, and sure as hell not 100%, 0% exposure to stocks. Okay, so you have the exact opposite. You have a 90%, a 9 to 1 ratio.
Okay, I found this on the web for do you have the exact opposite? You have a 90%.
Uh-huh.
What's that?
Siri? Oh, my
Siri.
iPad's talking to me. Okay, so you're not following the system at all, once again. So you have 10% in the TLT, 90% in stocks. So that's really the first step to follow our program is you need to have
sorry for interruption, but it's not only TLT. I own, let's go there. I own GDX.
Okay, how many shares of GDX do you have?
3,000. I bought it just the other day when we were talking.
The
And
price doesn't matter. We're looking at risk management and asset allocation. Okay, so that's all I care about at this time because everybody's joining at different times. Okay, so the value currently of
well.
Okay, I never told you to buy GLD.
Okay.
Okay, I'm going to have Mark critique this just to show that other members do understand it. Mark, are you available?
Yes, I am.
Okay, Mark. So, okay, tell us what else you own. Do you own GLD? Let's not talk about your options. Let's just try to get the underlying correct, Anwar, today. And we can worry about your options exposure next time. How many shares of GLD do you have?
Oh, I don't have any shares of GLD.
No, not you, Mark. I'm going to have you.
1,000.
Okay, I want you to show the crowd that, you know, it is easy to understand what we're teaching. We're going to let a customer of ours compare what we've taught, Anwar, versus what you have currently in your risk management.
We talked together and I made a mistake. I bought it right on the spot when we were online. And then I felt that you did not want me to buy it, but I did already press the key and I bought it.
Okay, well, hey, it's not too late. I'm going to tally up what the relative value of each position is, and then we're going to see if another member understands the program and can critique it, okay? And then let's see if we can all learn from this.
Yeah, great move, Jay. This is a beautiful way to educate.
So I will say one thing on the gold that Anwar bought mistakenly. Typically, if you make a mistake and you know you made a mistake, the best thing to do is to immediately liquidate as soon as you realize you made the mistake. And now, you know, there might be an exception to that. Maybe you made the mistake and you go, you know what, I like that, I want to keep it anyway. Then, okay, well then just consider that a different trade and not part of why you did the original trade. That now becomes removed. But if you're trying to follow a system and you accidentally bought instead of sold, or you picked up the wrong thing, you just immediately liquidate and go fix it and take the hit. And you know, sometimes you might accidentally make money, and most likely you're going to accidentally lose some money, but you just fix your mistake immediately. Because I've certainly done that myself.
I'm down 20,000 if I sell it right now.
Yeah.
Well, you're down
that's a good
20,000
reason.
no matter what.
Yeah, that's a good reason why you should liquidate immediately as soon as you realize it, and then that way that 20,000 might have only been 1 or 2,000.
Great point, Mark. And you know, I've done that myself. I've put in I think I bought a put one day when I was supposed to have a call and just immediately liquidated it, went out of it, and then went back to the proper structure. So great point, Mark. And
I
that's
have
so
definitely
cool
done
that,
that.
All right,
Yeah.
Mark, let's look at his asset allocation. All right, real quick, Anwar, this is your chance to learn because you wanted to learn, right?
Yeah.
All right, Mark, let's compare and contrast what we're recommending in the pro system versus what Anwar currently has. What do you see is off?
Well, the TLT is really light for sure. The stock exposure is extremely heavy. The GDX is at least the GDX matches the TLT in the proportions. So in those two relative to each other, that's actually good. The gold should not be, well, the gold is not part of the strategy. So that's outside of the strategy. So both the stock exposure and the gold are outside of the parameters of this strategy.
Okay. So I think that's pretty accurate. The stock exposure is supposed to be, so we're recommending 0%. In fact, we're now negative. We have an inverse bet. So we have 10% of our total account betting down on stocks.
Yeah, exactly.
This is short light by 26%.
And then also there's some options to match the TLTs and the GDX.
Yeah, let's not confuse them with options. First
Okay.
thing is get the base built, and then we can apply options on top of that. TLT is up 6.45% today. So that, at least you're making a little money here today.
$9.50, 49 cents.
Yeah. So Anwar, based on what we've told you today, what would you have to do to follow what we're endorsing?
I sold two large stocks now.
Let me rephrase that. How much stock exposure do we endorse right this second?
0, right?
That's right. Okay, now has that changed since you've joined this service?
Quite a bit. I sold at big loss.
No. Have I endorsed owning equities since you joined the service? Or have I told you that it's an immediate sell?
No.
Yeah, so it's been an immediate sell the entire time, right?
Yeah.
Okay, now what's happened to equities since I've been telling everyone to sell on this chart?
Well, one day it's up, one day it's down. Probably more.
From the point
It's
of
majorly down, dude.
Yeah, it's down 30%. So yeah, I think
I may ask you a question. You
Sure.
don't estimate that those stocks will go up?
No, I think they're going to crash for a year. 90%. That's what I expect. So we're going to have this conversation every Monday, Wednesday, Friday, it looks like, until you've lost $1.2 million.
No, if I tell you next time, I'll buy you lunch. So, okay, I sold one more. Okay, do you?
This might be the last chance, Anwar. You might see 20% down day next week.
Wow.
So yeah, the fellow you sent me, which is funny, I did see a Persian friend of mine. Well, who is that guy? He's got a huge following. Poor guy's gonna destroy stock market accounts if anyone listens to him. This guy had like 52,000 views, and he's going on there talking about the crisis. And the first thing he says, he knows nothing about this. And then they go on and on and on. And that's when I turned it off. Once he said, I know nothing about this.
You sure it's me?
Yeah, you sent that on the email yesterday. I could pull it up. This is comical. I mean, I saw this floating around Instagram. This lady works at a bar, so she wants to desperately go back to work. She doesn't want to be in self-isolation. Say, hang on, this is not a big deal, guys. Yeah, so your best bet is to also look at this, guys. Since I told you to go to cash, which was a long time ago, Look at the value of the dollar relative to other currencies. Went from, I think we switched gears right at 98. That was my line in the sand. Who remembers the line in the sand I kept talking about?
I do.
Yeah. Let's check out the USD.
I think that was the day I dumped everything, actually, Jason. All my net longs.
I remember it was on a Sunday. Was it the 1st or the 8th of March? Wasn't it the Sunday?
Yeah, we were buying aggressive puts back in January, trying to catch a bounce. What's the Australian? Is it AUD?
It was the second.
I want to show you guys the dollar against the Australian dollar, just to give you an idea of how this is blowing up. USD.
Yeah, poor Aussies.
But yeah, that's where you want to take your vacation as soon as it's safe.
That's interesting. The airlines have no change and the cheapest flights I've ever seen right now too. And you can change it all you want.
Yeah. Yeah. Look at that crash in their currency. Let's see what the change of value is. Okay, so it's just in a month, it's lost 14% of its buying power.
It's about the lowest I've ever seen for them. And I've been watching, well, first time I ever went down there was like 31 years ago. I still have friends down there. Yeah, it's bad.
Right. Beachfront's going to get cheap again.
Why is the Aussie dollar crashing?
All the currencies are crashing. Let me see if I can get a currency board.
This one seems worse than the others, though.
Well, they're connected to China.
Yeah, exactly. They're ultra connected to China. It's what was the forecast, Jay? It's something like the majority of their GDP is connected to China's economy.
Let me try to find a chart where we can see all the currencies in one little. It's pretty cool.
You guys talking about Australia?
Yeah.
Yeah.
Perry wants to talk, Ryan, if you want to unmute. Currency table, that's what we need, not a.
Can you hear me, guys?
Yes, sir. Perry?
Hey, Perry.
Hey, I like the $75,000. That's a lot easier to follow.
Yeah, after thinking about it, all the confusion, we're just going to keep the pro trades on the Thursday, and we'll trade the equities on Monday, Wednesday, Friday, and just keep life simple here. And then base everything on 75K because that was confusing everybody.
Yep, I think that worked a lot better.
Awesome, Barry.
Good to hear.
And Barry, are you still at the same capital allocation, or did you scale up again?
Well, I hadn't yet. I've got to figure out how to get in my bank. They've closed the lobby to the bank.
Oh no!
So I've got to go back in there and figure out how to move some more money over.
So guys, if the stock market if we didn't have the stock, currency, and oil crisis at the same time, you got to realize this would have kept going up. What happened was we had margin calls, and everybody and their mom. You don't in a liquidity crunch. You don't sell what's losing, you sell what's winning because it's the only product that's liquid. So this thing would have been sky high from here, but people got blown out. Now they're still highly leveraged. There's still tons of money in the market. And I truly believe the crash is just getting to a tipping point here. So I really like the way we have our clients exposed. Let me just sum this up for Anwar. Right now, I have you in cash with about half of your total portfolio. Okay. You own 0 equities, not 1 equity, not 2 equities, not Microsoft, not Alibaba, not Amazon, not NVIDIA, nothing. You own no equities. The only equity we have are gold miners. Okay. And that's a small position protected with a put. So that's step 1. That alone, it was a very valuable trade. Probably more valuable than anything else we've given out, which is simply that, hey, a stock crash is unfolding, get out. Step 2, we have, if you're in the pro system, we're aggressively trading the TLT. So we have an ETF position, plus we have some call options. So we're set to jet if this does resume. Now we would already be up a lot more, but people like Bridgewater got a huge loss. They're using anywhere from 5 to 10 times leverage. And there's lots of people just like him. So the equities dropped at such a fast pace that they had to take profits on the bonds to cover their equities. They were not properly hedged. And so that's why we had the TLT have a short-term sell-off. You can see it's already starting to rip right back up. Okay, so we have some puts in our equity portfolio, which is 10% of our total capital. We have 40% on the underlying TLT. We've got about another 12.5% with call options on the TLT. We've got a little bit of GLD calls, which are losing. And then we have a GDX position with the married put. So all in all, we've put around 20% of your capital to work in the option market after the dollar had significantly appreciated. That means that dollar had way more buying power today when we put it to work than it did prior. Now, do I wish we'd shorted this from the top? For sure. Certainly. But this happened quick. This happened in 3 weeks. Look at this. Just in February, we're at all-time highs. So I can understand people are in shock and awe. They want to wait for a big bounce for it to get back to where it was. But I just don't see that happening. So that's really bottom line is you're in cash. You've got some leveraged option bets. You've got a TLT position. You've got a small, tiny GDX position. We got put options on Asian equities and US equities. And we've got a lot of dry powder to buy up the key companies that are going to benefit from this crisis once the dust settles. Once there's blood in the street, even your own. But of course, it won't be our own because we're out of equities. So again, my portfolio has 0 stock exposure. It has 40% allocation in the pro to the underlying. There's a whole set of call options I'm not going to review right now, but if anybody is a new guy upgrading today, you'll get yesterday's alert. This is 10%, but is protected with a put, which is covered yesterday in detail. I told you specifically at least 5 times, I don't like the bank that owns GLD, HSBC. They're dirty. They're connected to China. They may not even have any gold. So the only thing I'm willing to do with them is short-term call options, which we have 2 of, and they're tiny, tiny, tiny positions. I have something like 0.1% of my portfolio risked in GLD. You have 100 times the risk. So that's completely wrong. And you didn't need to lose. This was worth, so you lost 300K that you didn't need to lose right there. You already saved probably 150K from what you did listen. And that's 15 years of subscription costs so far. Now, if you sit here and it crashes 50, 90%, then that's what you risk. Michael Seebeck, please.
Jason, we have, as you just mentioned, we have those tiny positions in GLD. We have a little bit of time, about a month's time on them. What do you think? Is there anything we could do to offset the loss that the negative amount that they're down?
No, not really. And I wouldn't sell them right now. I would wait till as close to the expiration as possible.
Mm-hmm. Okay.
But I do, for a little bit there, I thought that was it. The push to 180 would be it. But then I stopped and thought, well, you got to think, how are the powers that be, how are they going to solve the crisis underway? Okay. Can banks solve this by bailing out individual sectors? No, I'm talking about trillions of dollars in lost GDP here.
Mm-hmm.
It's too big for the private sector. So government has to make this happen. How does the government solve problems? Well, they sell bonds, right? Now, if we believe that this is not you know, some video game where we could type a cheat code and there's unlimited resources, but rather we live in a world where people go out, they put labor to work, they create goods and services, and that's the true economic output of an economy, then we realize we're faced with a situation where there's going to be less economic output, and we're going to have to pull all the resources to the government to redistribute. That's bad. That means stocks are going to tank as the government hogs all the resources so they can try to plug the holes in the ship. So that means that we're going to have to push money into bonds at all costs. What's that cost going to be? It's going to be devaluing currencies. It's going to be forcing all capital into the bond market. So I think that's the big picture, is that central banks will do everything in their power to ensure that governments are funded, wealth is redistributed to solve the crisis at hand. And that's what has to happen. There's no way around it. If that doesn't happen, this whole system collapses.
Mm-hmm. What is your guesstimate on gold going in the direction as you've explained a couple of times? Just time frame for the gold play.
Okay, so normally, so the reason I wanted to start building a small position in gold early is because we're doing quantitative easing currently. So usually it's rate cuts for a year. Then they stop cutting rates and they do QE to vacuum all the bonds out and pay off the big banks who bought the government debt. And then the big banks turn around, they buy stocks, and the recovery begins. This time around, the crisis is so massive that they're having to do rate cuts and QE at the same time. So I'm tempted to have exposure to gold immediately.
Yeah.
So that's the plan.
All right.
Worst case scenario, I'd say you got a year before gold takes off.
Okay. All right.
So I'll be a little shy to add exposure to gold until we see it performing properly. So we have a little exposure, and I'll begin to build on that. My best guess in the worst case scenario is gold bugs are a year early. But we're doing QE now, so the fundamentals for gold are very good right now. What's our biggest drawdown? What's our biggest risk? Central banks have a ton of gold. They can all coordinate to sell it at once, scare out everybody, and then buy it right back up. So, yeah, I'm going to dabble in small speculative gold plays and get more aggressive as time goes on and as the bond market is starting to show profits. And as we start to see more and more inflationary pressure. But worst case scenario, I'd say gold is a year out from its big run up. Best case scenario, it goes up with bonds.
Because of QE.
Because of QE, yeah.
Yeah.
What's the biggest roadblock for gold? The central banks manipulate it all the time. I mean, we got people going to jail, or at least getting fined. I think it was JP Morgan for manipulating gold. So, I mean, it's in the court system. They, without question, manipulate the paper gold. So far today, we're down 75 basis points on the SPY after being up a few percent, and we're up 6.5 on the TLT. So hopefully this trend just continues. Our portfolio is going to print profits. Now, if the opposite happens, we'll be doing the opposite. So if you think that things are about to get better and there's no crisis unfolding and this is just the flu, and you should do what Anwar's got.
Yeah, I'm sorry to interrupt, but right now might be a good time to buy those puts because the volatility just dropped a bit. I think maybe because SPY's been staying at the same price for the last hour or so. I think volatility dropped a bit.
Cool. Yeah. So again, getting the exact price is not a big deal because look, we have a lot of time premium and these are way out of the money. So we're looking for a big move here. So you have plenty of time to get this on and get similar prices. And you know, who knows, this might be available Monday, it might be available Wednesday, it might be available next Friday, but it might not. As soon as we get the next big leg down, it'll be too late to have this position put on. Now, maybe we get a big move up, you get a cheaper price next week, but time's not on your side when you understand that we have a crisis that's growing exponentially and we still got, you know, we got idiots running around just saying, I don't care. Julio says, I need to learn about options. Is Julio in the boot camp? Because we do have some good education on the options that you can start studying. So in every boot camp update, guys, which I think everybody has a 30-day trial to probably who just ordered recently, there's modules, one of which is the link to the spreadsheet tutorial, Gary Barber. So that'll be coming out shortly after this.
Hey, thank you so much. This is Julio, by the way.
Yeah, no problem, Julio.
Yeah, I'm trying to get to it, but between work and all this kind of stuff, it's kind of sometimes hard to get to.
A lot to learn.
I did see the first one, so I'm trying to get to it, but I wanted to start learning about the puts and, you know, the longs and shorts, all that kind of stuff.
Yeah, so go through all the boot camp modules for a good starting point, okay?
Yeah, this weekend, believe me, I'm going to be studying that. So
Awesome, Julio.
Very good.
Thank you.
You're very welcome. All right, guys, let's go ahead. Any last questions before I let you guys go?
Can I ask, is JNUG anything worth thinking about versus gold as far as the institutional risk?
That's the junior gold miners, Jay.
No, we like the big, the big miners can get money and go mine gold because it's going to be a short. Here's what's going to happen is we're going to print all this money. We're going to cause inflation. The Fed's going to let it run hot until we get this crisis solved. And then we're going to have runaway inflation probably for a better part of a decade. That's going to force the Fed to hike interest rates, and that's going to collapse every market there is. So we're going to have a really quick 1-2 year just massive spike in gold that we want to be positioned for. I don't care if I slow bleed with small capital in the gold market because I know the explosion to the upside is going to be enormous. So I just follow the system, guys. We don't need different assets. We don't need to change the trades. We don't need to do this or that. What we need to do is just have safe risk management, get the big picture correct, understand what's the problem and what's the solution, and then have good patience and strong risk management. I got to really emphasize the key to success is not picking the right underlying ETF. It's risk management. Okay. Get the big picture right, understand the problem, understand the solution, do the right risk management, and then the rest comes together for you. So I don't try to track a bunch of random ETFs. Everything we need, we have right here, ready to go. And that's all there is to it. So we just want to keep life simple, not have a million different ETFs for tracking. We don't want to start getting fancy with crazy option strategies. Simple calls, simple puts. Don't get greedy with position size. Be patient. Don't pick pieces of it. So Anwar's been doing little bits and pieces of the program instead of just the whole system. And so he could have saved an extra 300 grand just from not the stock crash. Plus he would have picked up like 150 grand on the TLT if he just was following the program.
And Jason, great point there. And just kind of to caveat that a little bit, guys, a lot of people don't understand if you just have the right mix of literally stocks, bonds, and metals, you can just literally hold those assets and it makes 9%. Okay. But if, you sometimes you go short the stocks and sometimes you go long the bonds and sometimes you go shorter or long gold, you can put a little alpha on that as well, guys. So it's kind of the core of, the thought process, right? But fortunately for you guys, you have someone that's as intelligent as Jason to navigate the markets, tell you when to be long or short. And guys, we just don't really care outside of those asset classes. And yeah, we might pick out as one sector because of an insane disaster that hit the world. And yeah, some sectors will do well, right? Some sectors will do well and will recover faster than others. But really, guys, the long and short of it, we're going to have 3 asset classes, and we're going to be long or short those 3 asset classes when it comes down to it. It's pretty simple. Okay. But for you, you have Jason's brain to navigate you through that and his trade engineering.
So if we don't go into a lockdown immediately, like a real lockdown, I think the lockdown we have right now where it's like, don't go out, but people are still going out. Expect to have 10 times the cases we have now in 2 weeks. 10 times. So if we don't go to lockdown,
Jason, I think we're likely to get that anyway, just because the testing is cranking up and they're going to find the cases that are already there.
Yeah.
So lockdown or not.
We got to lock down. We got to isolate. It's going to crush the economy, and they got to put a lot of money into to the bond market. So that's going to make everything else drop in value, because this is not a video game where we can punch in a cheat code and get free money. Okay, so wake up call. There's limited resources in an economy. We have to redistribute that wealth to the government because the crisis is so large that private sector can't cope. So that's the big picture. The bond market's going to wreck everything else because it has to. Otherwise, the whole financial system goes down.
Hey, Jason, I got a quick question before my battery dies, and I don't know. I'm just kind of curious. It was going through my head yesterday, and I thought about this. What has there been? Have you considered or have you looked at the possibility? The ETFs, even though the S&P SPY, for instance, is the most widely held, that something happens to the structure of some of these things.
The ETF companies like BlackRock and.
Yeah, well, just the whole. Yeah, I mean, could these things collapse?
No, I don't think so. I think here's the game plan for the rich. Okay, they've been giving the rich nice little pops in the stock market and using the media to tell everybody to buy the dip to hold. Okay, so that the rich can get out and buy bonds. And what's going to happen? The Fed's going to buy the bonds for big profits. They're already doing that. And the big banks can't wait to buy stocks for probably a quarter on the dollar. I bet you, that's be my guess. I bet we get a 75% crash from top to bottom, minimum, and 90% max. And then they're going to buy it. The bank's going to own every company under the sun because they're going to make a massive profit on these silly bonds that are guaranteed to win because the central bank makes them go up. And then they're going to turn around and buy stocks when everybody else is panicking. So I think a 50% crash is foolish, that this is more of a 75 to 90% crash.
Wow. And my concern would be Boeing's China's attempt to buy Boeing. Very scary. They announced that this morning.
Wow.
That is absolutely something the government should block, 100%.
Yeah. Well, Nikki Haley, that's why Nikki Haley, I think that's why Nikki Haley stepped out. I think that's why she stepped out of being a board member, because, that's unacceptable.
Nice bit of news there, Karen. Good eyes, good ears.
Oh, well, you know me, aviation.
Yep. Yes, ma'am.
Oh, yeah.
Nice contribution. Awesome. Okay, guys. Let's see here. Saw a couple questions going through the chat box, Jason, if you want to address those.
Okay.
And Tony, I did send you a picture of me. And Eulette, I did send you the link to the options page so you can get set up. And congratulations on finally getting the capital. Proud of you.
No fair. You need to send us all that picture, Dean. Come on.
Okay, I'll drop it in the in the box here.
Yay.
Yeah, so there's a rumor Boeing's getting buyout offers from China to answer Dal. Let's pull up Dean's photo. Woohoo! That was a fun wedding, huh?
Woo! Look at that. How sweet.
Yeah, so that's me, Tony. That was one of the best days of my life, that's for sure.
Quite handsome dude there.
You're too sweet, Eulette. Too sweet.
They call him Dean the Machine back in the day. Okay, Mike says ask price is 1564. Yeah, so this kind of timing where it's, you know, pay any price because this may be your last chance. Unfortunately. Frank says the bulk of people will be showing symptoms in a week or already infected, but just don't know it. Yeah, who knows? I might already have. So that's probably the single. What Frank just put out is the most. So I'm always looking for how could this go against me, right? Well, one of the most hopeful things I found out for sure yesterday. Well, there's two things. One, and this is not proven, okay, because this disease is so early, but if you can get immunity after catching it once, well, that's really good news. A lot of people are going to get immunity and go back to work. Okay, so that's one. As long as it doesn't come back and get you from a slight mutation. So that's really unknown so far. Looking at the way the Chinese are dealing with this, I don't think that's the case, unfortunately, because they're still wearing masks. Economy is still severely shut down. Okay, two, they're going to be sending out a test kit that doesn't test if you have it. It's going to test if you had it. So it's going to look for those antibodies to be present in your current bloodstream. So that will be huge because now you know if you've already had it and you're potentially safe. So that's probably the best news that could possibly save us from the 90% scenario, maybe more of the 75, is that we can get it. 90% of us will have no problem beating it. And then we can easily test that we have had it and know that we're safe to go out into the public. Because once you have the antibodies, not only do you not catch it again, you cannot spread it again. Okay, but that's a big if. There's 30 variations so far, 2 main variations. One's super strong and lethal, and one's much weaker. Now, what happens to a virus that's too lethal? It doesn't spread as well. It just kills everybody. The more deadly virus is the one that spreads to everyone with low symptoms and just takes out the weak and is undetectable. So the weaker one may actually be more of an economic consequence than the lethal one. Harish says California lockdown. Yeah, I think everybody's gonna be locked down pretty soon here.
Hey, I saw a study or an article that said in Vaud, Italy, and also in Iceland, they decided to test everyone, or at least everyone they could. In Vaud, Italy, they tested 100% of the population. 50% of the asymptomatic people were positive.
Yeah.
And they found a similar statistic in Iceland.
So here's why I think they are not testing, or they're trying as best they can to hold back the tests, is they've gone to very remote locations and tested a bunch of random people who should not have it. And if you go to enough parts of the world that should not have it and you test a bunch of people who have no symptoms and a lot of them are having it, you can get a pretty good idea of how bad this already is and start to understand why the CDC has done everything they can to prevent a panic and try to slow down the testing kits. And so, yeah, so you're going to incubate for 7 to 30 days, maybe get sick, maybe not. and you're contagious the whole time. Then you're going to have like a 2-week period if you do have the infection take over, where it could either be resolved or it goes to a critical condition. It's the people going into that critical condition that are going to crash our economy. Not the ones who die, but the ones who need ICUs, okay? Which is about 1 out of 10 people is what it looks like right now. And that's shooting low. After you have beat it, you have another 7 to 14 days where you're still contagious and you're still shedding the virus. But you have antibodies that should last for years to come. And now you are much less at risk of at least a very similar virus being able to create the disease and take over your lungs. So that's the people I follow that I trust the most. That's really the ballpark on that. So what we really want to do is roll out the, not the test to see if you have the virus in you, but rather the test to see if you've become immune. Because then you can go to work and not worry about infecting elderly, 1, and then 2, getting infected yourself. Now, we're probably not going to know the true immunity that your antibodies really provide for you for quite some time, but that's in general what people rely on with vaccinations in general as well. So let's hope that's the case. Let's hope that 90% of us get a light cold or nothing, and we develop the antibodies, and we can take a test to prove that we have the immunity, and we can get back to work, because we really need America to get back to work as fast as possible. Otherwise, we have a Great Depression scenario. So I want to be clear. I'm hoping for the best for America, and I want this to be resolved as quickly as possible. And I'm tracking every little thing I can find that's positive as well as negative. So I'm not trying to scare people. But in the short term, we have to slow down the spread, and we have to slow down the inflow to the hospital systems. And we need to get a lot of money to healthcare, biotech, medical devices, just to deal with what's already occurred. So that's makes our predictions in the markets pretty easy. There goes that SPY.
Yeah, baby. Mark, what are you up on your puts? Roy, what are you up on your puts? I want to hear some live numbers, guys. Mine are looking pretty good. It's always better to hear from the client base though, instead of
I guess partner. I got in late because I'm actually down on these SPY puts.
Are you really?
Yeah, but
crazy.
I think the market's been going up and down today, and I think I accidentally got in at a high point. But you never know.
You know, stupid market makers are making the spread so insane. It's ridiculous.
Well, you probably have to pay off the spread.
Crisis.
You probably got to pay off the spread first. So yeah, give this one a little time, but it's going the right way. Yeah, so probably your spread is what you're paying off first, because the market's going lower from where we entered. But the market understands that this is a slippery slope here, clearly.
Oscar asked if he should sell off all his stocks. I know we covered that several times, that we hold 0% in equities, but.
Yeah, and I can tell you, Oscar, just from if you have a Robinhood account, you haven't had your stocks for a decade. So yeah, cut them.
So again, we don't tell people specifically what to do, just what we're doing in our model portfolio.
Right.
So you guys
also, he should dump that Robinhood account.
Yeah, seriously. Oscar, post your email in the chat box, and I'll send you a link to Ameritrade, and they'll give you like a gift card or whatever if you sign up with them. Okay, let's see here. Okay. Yeah, and I don't wait for that. I don't try to do the cute stuff with the putting in a limit order, guys. I just hit market always. A lot of people sit there and toy with the orders. I don't. And I saw. I think I put my order in. The SPX was down 2, and now I'm down. Now it's down 47 points. So I don't toy around with the orders. I literally spend as little time trading as I possibly can. It's so much better to the more the more you just execute it and go back to your day and don't think about it, the better off it is. And
So today's the quad. Wow, you guys got to be getting close. So you should be starting to work off that spread between the bid and the ask here pretty quick. We're going down.
Yeah, I just heard there was a large order for 2360, and there you go. It's going down.
Yeah.
Yeah, I think quad witching will happen the last hour, right?
Yeah, we're getting close.
Yep.
Well, so everybody has the puts underwater, which is everyone who sells puts. They have a choice. They have a choice, and that choice is either to cover and hold stocks over the weekend.
I gotta plug in.
Or they can cover and dump those stocks before the close. What do you guys think they're going to do?
They're not going to take the risk of holding an equity over the weekend.
That's what I think. So you might get a vicious sell-off at the close here.
And what I've heard in the past from some experienced traders, they say when there's a big sell-off on Friday and it closes at the low, Monday almost certainly follows with a gap down.
Yep,
Well,
pretty high probability.
We got that little bump to get in here, huh?
Yeah, Jay, I saw that drop in the volatility, and I was like, I know he's going to hit it today.
I've been telling everybody I'm waiting for a little pop. And we finally got a tiny one. I was like, oh, God, this can't even pop. I was hoping for a 5 or 10% day to do this, but it just seemed less. It just seems so pathetic.
Okay, some news. The WHO says the World Health System is collapsing, quote unquote. Well, I don't really have a lot of credibility for the WHO, but
too bad Jason wasn't the CEO of that company. Pathetic company.
I think they're corrupt, unfortunately.
Oh, heck yeah.
Oh, they're getting paid big time. Big time.
Yeah.
Yep.
Okay, our puts are positive.
All right.
Yeah, I'm rocking on mine.
And just about break even on my puts.
Yeah, Dean was teasing because I've been telling everybody puts are too expensive right now. Puts are too expensive, and Dean's like, "Well, they keep getting more expensive, Jay." I was like, "I know. Give me a little drop in the VIX, and I'll give you that trade." Look, we got it under. What was the VIX when I told you guys to get it? VIX was, VIX barely popped right now. It's starting to.
I think it was 60s, somewhere in the 60s, Jay.
Yeah, I think it was at 59 when I got us in there. So that's.
Okay. Yeah, I want to say it was like 60 and change. Yeah, when I put it on. But yeah, those sell algorithms are going to go wild when they see the first VIX print above 100.
Hey guys, can you hear me?
Yes, sir.
Okay, so I just got a global health advisory for my corporation, which is a $12 billion corporation. It's from the United States Health Department that says if you need to get back in the United States, you must travel immediately or prepare to stay abroad for an indefinite period of time.
Holy shit.
Yeah, they said that in the president news conference too.
Oh,
right. Well, that's a level 4. That's exactly what they were saying when they raised it to level 4. That's kind of an established protocol when they got this back in 9/11. So now you're just getting it into your corporations this way. But yes, so keep reading because that is the platform for everybody now and has been now since last night.
Wow, this thing's gonna dump, isn't it? What do you guys think? Should we stay on here and have fun till the close? See how much money we make? Or do you guys want to get out of here?
Well, I can't. I got to run. I got to do a chore real quick before the end of the business day, and it's East Coast for me. So
So I have a question. I stupidly was waiting for volatility to drop more, and I haven't purchased any of my SPY puts as yet. Which is
now or never, my friend. Now or never.
that was good. That's my question. You think I should? Because volatility just increased a lot, just because.
It's now or never.
Got it. Got it. Makes sense.
Yeah, this is wild. And what, you know, all you gotta do is watch that Harvard arrest. That's really, I think that's the underlying story here that's gonna come out.
Do you have a link to that news clip that you played?
Yeah.
I remember when it was in the paper, when it was in the basic news, nobody cared. I mean, this is, you know, but I've seen that before. Not that video, but the, you know, the document.
Article, yeah.
Yeah.
You got to listen to the details of the, did everybody get to hear that? I mean, I've listened to that like 5 times and I was like, holy crap. And I saw it. I knew there's something to do with it, but I mean, that's just, you can't get more detailed. So this is like the influenza because it's airborne. Okay. So it looks like what they did, this is my speculation. It looks like they took SARS, made it like 100 times smaller, and then changed the RNA inside of it to be more deadly. So you got flu, SARS, HIV, Frankenstein, airborne, asymptomatic.
Okay, so I got a piece of news that just came in. Can you guys hear me?
Yes, sir.
Okay, so I just got a phone call from a friend of a friend whose brother's in the National Guard. He's just been called to active duty, and they're going to announce a lockdown at 6 o'clock.
Wow.
Wow.
Get your food, guys, if you don't have it now.
Why I'm running out.
What state is that lockdown going to be held in?
This one was Texas.
Yeah, they got Florida's coming up with something too, I think, because I just got some. Let's see. Governor DeSantis orders closure of all restaurants except for takeout and delivery service. So we'll see how that works. And as I've been on here, I've been getting document after document about my mother's location. She's in an independent living facility tethered to the other facility, and they're separated, yet they're still under the same umbrella, and it's been a struggle. So it's just getting worse and worse. You know, they
Brian,
won't let them.
I want to find the article where I said a lockdown in the United States comes next.
Just go to /updates.
Okay.
Know it all.
Oh, this.
Oh, wait, I gotta get the S.
S.
Should load anyway. That's a problem.
Okay, so it was like a month ago. I told you guys this was gonna happen. Can he see into the future? No.
What do you think? You're Nostradamus or something?
Can he play chess though? Absolutely.
No
Guys are so much. I was going to say such nerds. I love it.
Where's the lockdown comes next headline? There it is.
There it is.
Look at that.
February 28th. Oh God, my family's completely disowned me over this, but I was telling them it's all gonna happen. Trade alert. USA goes into full lockdown next. And this was published February 28th. So the next big thing that no one's predicting is war with China and Russia. Let me get that Harvard, that press conference.
Good.
Oh, Dal asked, is this chat room part of the service, and when is it open? It's worth the price of admission. Awesome, Dal. So typically I try to get things opened up in the chat room by 11 Eastern. Okay, sometimes I have people that won't let me off the phone, so sometimes that becomes 11:15 or so. But typically we try to have the webinar open by 9, and I actually cleared out a little more time in my schedule for that. Or 9 Mountain, I'm sorry, I'm thinking in my time zone here. So 11 Eastern is when we try to open it up. Okay, Jason starts the official presentation at noon Eastern. Okay, and yeah, guys, the more interaction we have in here, the better off we are. It's all about you know, for us, you know, Jason's obviously leading the community, doing a phenomenal job doing it. Okay, but it's really cool because we do, you know, we have a lot of really smart people in here on top of just Jason, right? So we have more resources, and you know, as Perry just said, from a friend, Athens, Georgia, just went shelter in place. Like that's a big announcement, right? That's good to know. It's one of those things that you know, if you don't have your food, you want to go get it, right? And it's just good to have that contribution. Karen had a beautiful point of, you know, about what she heard on the level 4 travel alert from the president today. I mean, it's awesome, guys. So, but yeah, Dal, it's absolutely part of the service, bud, and
Every day but Tuesday.
yeah, every day, but yeah, great point, Rhino. Every day but Tuesday.
And we do 2 webinars on Thursday if you're in the boot camp.
Yep.
Anwar, how much did you lose in stocks in the last hour, buddy?
I think he's still trying to get into those puts.
Did you get his puts? You get your puts, Anwar?
I don't think so.
Did you fire up a trade yet, Ryan?
Get real. Broke ass ain't getting no trades.
I sold 5 items, I think, and I lost lots. I will not cry
save
like
lots.
the lady
Save
cried
lots.
the other
Save
day.
lots.
What's that?
Okay, anytime you save money, I want you to use the words. I want you. We need a reverse psychology. We need reverse psychology on your mentality. You saved lots, not lost lots. You're saving money when you step aside from taking big hits.
It's not your money, it's my money. I lost.
All right.
So what do you think instead of, I sent you a question. Instead of, what do you say here? Buy to open June 1st, SPY put at 220. Why don't I sell a put?
No, we're not gonna. The only questions I'm going to take is if you have a problem with the trade alert.
Okay.
So I did not tell you to sell a put, so I'm not going to answer that question.
But you make more money than buy the put.
Okay.
It's crazy risky, man. You're talking about trading in volatility. You have to have a very clear understanding of how volatility works, and then to do it in the middle of a crash would be very crazy.
Yeah. Yeah. Well, so let's be clear. I'm happy to talk about questions related to the trade alerts I've issued, and I'm happy to have you tell me what you have and tell you where you're off. What I'm not going to do is entertain random trading ideas. Okay. That's not, it's going to confuse the crowd, first of all. And it's, you know, look, Anwar, you're going to wake up Monday and be one sad puppy because you're sitting here wondering about selling puts instead of following the system. Okay. So if you have a question about the trades in the model portfolio, great. If you have a random trading idea, go join some forum and post it for those guys, because it's just going to confuse our crowd and it's not necessary. Okay. So our trades are up. We're making money.
All right.
If you're following, you're doing really well. And look, we're watching this crash live, guys. This is not good.
It's just a question.
I know, but I'm trying to help you here. Just since I told everybody to sell today and short it, we're down. Look at that. I'm not trying to be mean to you, Anwar. I'm trying to help you out. Okay, bud?
Okay.
Hey, Jason.
Yes, sir. Woo! Look at that. Starting to drop.
I have been trying to learn futures market for 2 years. And for that time, I focused just on crude oil. And then I took a primer course back in December from Jim Dalton on market profile. And I have to say that after 2 weeks of listening to you guys and watching these two systems side by side, I would rather be on your side of the house playing these small calls than the roller coaster ride on the futures. unbelievable. I thought I'd never be saying this after this much time invested in trying to learn how to trade futures.
Well, that's
So,
very nice of you to say, Michael. I appreciate
man,
that. I do have a futures trade coming up.
you do.
But we're going to short the hell out of China's currency here.
Because I put a line in the sand at 23.77. We had some high volume there, and it's nothing but gone down in the past hour from that point. Now
we're going to short CNY through the Hong Kong exchange pretty soon here.
CNY, okay.
That's you can only do it through the futures market at Interactive Brokers. It's going to be a tiny position that can make a fortune, and that's for boot camp. So we've been waiting for this moment.
Is that something I would have availability to with the regular plan, or is that only under the pro plan?
You'll have a trial for sure.
In the 30-day trial, you'll get it. Yep.
That's amazing.
So yeah, the dollar index is rocketing. So I was telling you guys, first we saw oil market blowout, margin calls. Then we watched the stock market begin to blow out, margin calls, which is associated to the risk parity funds like Ray Dalio. Now we're seeing the currency market blow out. So yeah, there's going to be a good opportunity. Let's just see how that trade's looking right now. The CNH is the offshore one. CNY is the onshore. Woo! Starting to move for us too. So I should have got in right here, but oh well. This one could blow out to 14. I think the Chinese currency is at least twice overvalued. So basically, the higher this goes, the less valuable China's currency is, which I think is coming up pretty soon as tariffs. We're going to put this whole blame. I think Trump's going to run on three things. One, healthcare for all, Bernie Sanders. Two, free money for all, Andrew Yang. And three, this is all China's fault. So I think you'll see those three things come to play here. People are going to love him for it, even though the market's going to be down 50, 70, 90%. And we're going to be retaliating, which is
I think you can add a couple of items there. Bring in the manufacturing for America first, bring all this stuff back home, and also our borders.
Yeah, bringing manufacturing home was his original running slogan and platform anyway. So he's only going to push harder on that. I mean, he has never changed that message.
And then
no, as a matter of fact, and they were talking about on the speech today when I was checking in and out. I mean, because they're trying to get some of these companies to go ahead and retool so that they can actually produce some stuff that we need in this country right now, especially respirators and all this stuff to do all that. So they were discussing that.
Yeah, and Trump and Pompeo continue to call it the Chinese virus. They are not going to call it COVID-19, and they never will.
Exactly, Mark. The first time I saw Trump tweet that, I went, "Oh, well, there's Jason's prediction of the war."
Wow, what a trade today, huh, guys? We sure nailed that with the right position size.
Heck yeah, Jay. And Mike Instaldi said, is the upcoming yuan trade something one can execute only through Interactive Brokers? Yes, Mike, that is true because they're the only broker, only major broker really, that you can get the futures exposure to that position. Okay, and so jump into the bootcamp, videos that you have, Mike. There is a video that will show you how to set that up.
Oh, and then the Hong Kong peg trade. So there's two big trades. The Hong Kong peg breaking that Kyle Bass made famous. That's the one where you have low risk, but if it hits, you're rich. I mean, filthy rich. And that can happen if we take away Hong Kong's special status, which I could see happening. That's one. And then two, we bet that the Chinese currency will be allowed by the Chinese to devalue because we're going to come in and punish the Chinese. Now, so far, Trump, the headline I saw today was, China did the first part of phase one. But if you read between the lines, I think this was a coordinated attack. Russia attacked the oil market right when China knew.
Oh yeah.
China knew very well when they signed that. Karen was the first to point this all out. And she called BS way back.
Yep.
Way back. So, but yeah, I think we're going to be at war with China, Russia here pretty quick, which means tariffs, which means revoke the special status of Hong Kong, which means sanction Huawei, ZTE, which means if you don't ban China's Huawei, we're not going to do business with you and we're going to cut you off the dollar, which means, you know, how does US government raise $1 trillion with a 0% interest rate? They go stir up crap around the world and wreck everybody else's markets. So you have no other option. The only option that's going to look attractive is going to be bonds. Because we have to raise the capital to fund the crisis. Private sector can't solve this. Public government must do the job. Okay? Economic output is not a video game where you can type in a cheat code and create extra resources. So the utility of our economy is going to be lower for the next 2 years, not higher. So the money has to come from somewhere. Money's just something we use to represent energy. And so if the total output of all the global economy is going to be reduced maybe 50 to 90%, and we're going to put all the resources into the government to redistribute, well, then that's your big picture right there.
Hey, Jason, I have a...
There's a cheat code where we could just print some free money. It wouldn't cost anything. Go ahead, Mike.
Jason, just looking at TLT right now, it kind of peaked at about 1245 Central, and we're just dropping off a little bit. What do you suppose is going on there?
So, okay, analysis on TLT, the bullish case is that central banks are cutting rates and buying bonds. So that's the good news. So that is like your PAL put, but for treasury bonds. Okay, so that's the key thing that we wanted to see. That's in place. Okay, what's the downside to the bond market? Well, we're going from issuing 20 billion or 18 billion a month on the front of the month on the 30-year to probably more like 200 billion a month. And we're going to introduce a 25 and a 50-year treasury. So the supply side of the bond market is going to probably increase tenfold. So if we're going to try to get central banks to buy this debt at an interest rate that's starting at what, 1.6, they want to know that they have some money to be made for taking on this risk. So it's in the government and the central bank's best interest to slowly allow the bond market to appreciate until we've raised all the money we need to cover this crisis. So I would expect a vicious drop in the stocks and a slow grind in the bonds.
With short-term pullbacks like it's doing and has been doing.
And anytime somebody gets blown out with a margin call, expect to see a pullback in the treasury because that's the only liquid asset they can get out of.
Yeah.
But ignore the noise. Big picture, we have a limited economy that's going to be handicapped. What is it on your go-kart when you can't go as fast?
Governor.
Okay, yeah. So our economy has a governor on it, and it's this crisis. Okay, so stocks can't do well. They can't do well if we have to push all the resources out of private sector into the government. It's really that simple. So we got to ignore the noise on the TLT, realize that the big banks are not going to lose money buying bonds. It's not going to happen. Period.
We have way worse problems if that happens.
So what could they do? What's the biggest risk on the TLT? They all say, all right, you know what? We need to start this yield a little higher because we realize we're gonna have to do this for 24 months minimum. And we need to make this a slow grind. So I could see them like they are with the gold market. I could see them saying, all right, let's reset this up to 2%. But then again, the government doesn't want to own a whole bunch of interest. They would rather sell this debt at a very low rate and let the Fed pay off the banks with QE. So it's a tough call in terms of where they're exactly, what's the impact of increasing the supply side tenfold
Mm-hmm.
and introducing a 50-year and a 25-year. That's the biggest risk to the TLT. Big picture, I don't care. I know that these rates are going to go towards zero over the course of 2 years. So I want to be positioned. I have a put under the ETF, so I can't get that hammered. And I've got call options for extra leverage.
The other day when you mentioned when the bonds are perfectly priced, is that what you mean, that they're trying to figure out what would be the best rate to set it at so that it would be attractive? Is that what you just said? Is that what you referred to a few days ago as far as perfect pricing of the bonds?
No, but that's a good point. So my first risk with the TLT that I'm concerned about is understanding that there's likely going to be a 10 times increase in supply.
Okay.
So without central banks intervening and without massive crises, well, then you would think that yields should rise, right?
Mm-hmm.
If we increase the supply tenfold without a 10 times increase in demand, then the TLT should go down.
Yes.
But if I think the TLT is going to go down, and I know that there's some 22 trillion outstanding in US treasuries, how am I going to raise trillions of dollars when everybody's trying to sell treasuries and yields are spiking? No one's going to buy it. So how do we fix this? Well, what did the Fed do so far? They cut rates to zero.
Right.
And they're doing QE. And so we went through the circle of life of a bond. If I can borrow for zero, buy a treasury for a positive yield, throw it into repo market for cash, then go loan it to a broker dealer for another interest rate. And then I know that rates are going to go lower over time because of this mechanism, and that the Fed's going to buy it from me. I'm not going to even have to sell my treasury in the open market. Well, that's why large rate cuts, they make it so there's no other investment vehicle that makes sense. That's why you see stock crashes during significant rate cuts, because all the money flows right to the guaranteed profit, which is the bond market.
And so even with the 10 times supply, it won't exacerbate the treasuries in a downward movement, right? Is that what you're saying? If I understand correctly?
The central banks are going to ensure that in the course of 2 years, the primary dealers who, you can't even go to the auction. The primary dealer has first right at all the debt and the big central banks. Okay, so the central banks own the Fed. Okay, so what's the deal they have in place? Borrow from the Fed for zero, buy the treasury, hand the treasury to the repo for a small interest rate. You get cash. You don't have to sell your treasury. You take that cash, you go loan it to the broker dealers. Broker dealers can speculate and lend it to whoever they want. Okay. Then as rates go lower, because everybody's doing the same thing, when they need to, they sell their treasury, not to the open market. The Fed's sitting there vacuuming out the treasuries. And that's the, let's pull that up. So this is the mechanism that makes bonds work during a period of rate cuts. But to have QE and rate cuts, that's a bond market's
double whammy.
It's like a girl, girl's best friend is a diamond. Well, bond's best friend is rate cuts and QE at the same time.
Okay.
So here's your circle of life for.
And that was in what day's video?
This was the webinar reminder for Thursday.
Okay.
Yeah, yesterday.
Right. I'm trying to get a visual in my head because I have never understood how this all works, and I'm sorry for taking time.
No,
Dean,
Mike, great questions, bud. Phenomenal questions.
Beautiful question. I'm going to take a 2-minute break. Dean, can you read this out for the crowd? And I'll be right back.
Yeah. Okay, cool. So, and this is from Jason's presentation yesterday, guys. And I honestly thought it was maybe one of the best he's ever put out. So if you're in the pro, go back and rewatch this presentation. Okay. And all you have to do is go to your email from yesterday. Just click on what looks like a YouTube video. Just click on that and it'll actually replay it. But step one, okay, the Fed fund rate is dropped to 0, allowing primary dealer banks to borrow capital for free. Okay, step 2, they pick the auctions from the US Treasury at the going yield, which needs to be greater than the cost they've borrowed for, in this case, currently 0. Step 3, the primary dealer bank then borrows money from the Fed repo market at a low interest rate using the same treasuries as the collateral. Okay, step 4, the primary dealer then lends money to the broker dealer at an interest rate greater than the cost they have to borrow from the Fed's repo market. Step 5, Ray Dalio and mom and pops can then borrow money from broker dealers at an even higher interest rate and speculate on whatever they like: stocks, treasuries, corporate credit. Okay. Step 6, all of this is happening. All of this is happening. The Fed is also using quantitative easing to permanently retire, quote unquote, any bonds which are aggressively sold that could result in bondholders showing a loss in their position. Okay, step 7, this becomes a self-fulfilling prophecy, which over time drives bond yields lower and allows the government to easily raise the capital it needs. Okay, and can't really see the next part of it, but Jason will hold that in a minute. Sorry guys, I think he had to run a bathroom break. We've been on here for I think almost 3 hours now. But just real quick, so SPX now is down 78 points. So how's everyone's puts looking real quick? And Jason will cover the bond, your 7 steps, right? To really understand the bond market in just a minute here. How's everyone doing on their puts? Perry, how are your puts looking, bud? I see your microphone's unmuted. Michael Seebeck, see your microphone's unmuted too. How are your puts looking?
Well, I did not take the puts, but
man.
they would be doing great.
Okay. Well,
$300 a contract.
Right. Okay.
Yeah.
Well, it's like
okay.
we've been saying, right? It's not too late. Mike and Saldi, how are you doing, bud?
Jason, this is Perry.
I'm about 2,000 ahead on the SPY puts.
Nice, Mike. And Mike, you joined last Friday, right?
Correct.
Awesome. How's everything looking on your P&L for now?
I don't have it neatly worked out yet, but the TLT is still a bit of a problem because I got in at a price that's much higher than I think most people did. So the actual P&L is probably not that great overall, but it'll work its way out. I'm not concerned.
Nice. Awesome, Mike. Yeah, and long term, guys, we're looking at TLT over $300. Okay.
Yeah.
So just hold tight on that. We have plenty room to work up. Hey, Perry.
Dean. Dean, this is Perry.
Hey, Perry.
Looks like right now I'm up about 5 on
nice.
The SPY puts.
Beautiful,
so great. Yep.
Awesome, Perry. Very cool.
I've been getting out of a couple of long-term holds. I've had eBay since 1999, and it's spun off PayPal. I got rid of both of those today.
Okay. Nice. Yeah. I'm sure you're going to be paying a little tax on that, but hey, that's okay.
Yep.
You're never going to go broke taking a winner. That's for sure. Cool, Perry. And Perry, tell us a little bit about your story, kind of your background, how you found us, and what you're doing now. Kind of interesting story. And I got to tell you, Perry, you've done a phenomenal job, bud. Kind of going from, maybe intermediate to, somewhere around there to really doing an incredible job with the system in a very short period of time. So number one, Perry, I'm proud of you. And number two, if you just share this story with the crowd, it would be greatly appreciated.
Yeah, I've been a business owner for a long time and sold a home medical business a couple of years ago. Have a construction business that I'm liquidating now. And so over the last couple of years, I've tried to learn, everything I could in the stock market. And with not much success, I hadn't lost a lot of money, but I hadn't made a lot either. So I've been just kind of sticking my toe in the water, trying to figure out a good plan, and was really, really frustrated with it. So wanted something that was pretty secure, that wasn't super risky, and came across these guys and been very, very impressed with it. So I've been involved since the last week of January, and was out of town for 3 weeks during February, and was able to just, relax, take my phone with me, make a trade a day, and been very, very impressed with the insight of these guys. So I'm pretty excited about where we're at.
Awesome, Perry. Very cool. Have you been showing the wife yet? How you doing? And
Yeah,
Nice.
she laughs. She says, "I don't hear you hollering at the computer anymore."
That's funny. I love it. How's your daughter doing, Perry? Is she? Did she get down to New York?
We got her home a couple of weeks ago. So,
Nice.
after, Jason kind of said, she needs to come on home. I talked to my wife about it, and I said, as soon as she gets the work from home, go ahead. She's going to be working from our home, not New York City home. So
Sure.
she's been home about 2 weeks now.
Okay. Awesome. Awesome to hear, Perry. Very cool. Let's see here. Okay, guys. Any other questions? And Jason, are you back at this point, bud? You might have had
Go ahead and wrap it up, Dino.
Okay, cool. All right, guys. So just real quick, I'm gonna post the link to the options page in there. Okay, so you guys, if you're on a trial, go ahead and get signed up. Okay, and if you have any questions too, just call me. Fridays are a pretty busy day though, so I will call you back. I promise, but it may take a few hours. The Fridays are, for some reason, our busiest day on the sales side of things for us. So I'm going to post that in the chat, and then we will go ahead and wrap it up. And it looks like there's a couple more questions in here. Saras says, don't worry, Saras, you're doing exactly what you have. Don't do anything with the cash you have in SPY and EEM for selling out of those. You're good to go, bud. Don't worry about that. Dal says, what do you see happening to the real estate market? Well, Dal, previously stock market crashes, real estate market follows a little bit delayed. So that's the thoughts there. And I would love to see a real estate market crash personally. I'd love to see beachfront get cheap again. Those are phenomenal opportunities. Let's see here. Tom Hendricks said, trades looking good, Dean. Awesome, Tom. Glad to hear it, bud. Let's see here. Dal said SPY puts are up. TLT is down, but they're long-term. Right, exactly. And FR said, gold view short-term in the context, TLT up and SPY up. Yeah, so TLT will go up as SPY goes down. Okay. And yeah, that's kind of the risk parity trade, right? And we will tell you guys to get back into SPY eventually, but the blood needs to be flooded on the streets before we do that. Okay. E. Roger said, my money just showed up in my account. Too late to get it into the SPY? No, you can certainly put on those SPY trades. You are good to go on those. Should I sell my houses now? Well, so if here's the thing. So if you were thinking about selling the houses, right? And you were thinking about doing it in the next few years, now is going to be a better time than 2 years from now. Okay. And now is going to be a much better time than 1 year from now. So I would just kind of leave it at that, right? And let you make your decision from that. But that's kind of, what the data has suggested. Okay, guys. And just real quick, so something else, I was looking at potentially getting into a commercial real estate investment for the first time. I actually got an email last night that they're scrapping the project. So until things settle down here, I was hoping to be invested on my first real estate property, but I guess the group is scrapping that. So let's see here. And Frank says, got to wonder what the fatality rate will do to the real estate values. Yeah, exactly, Frank. And what a lot of people don't understand is, at least in the United States, that the 60% of the total real estate market is owned by baby boomers. Okay. And they're certainly going to be affected in this situation more than other demographics. Okay. So let's see here. Let's see here. And Elet says the thing is government telling renters that they don't have to pay rent. That's me. Yeah, Elet. It's Yeah, it's tough, right? It's really tough when the federal government starts saying things like that. Okay, so yeah, tough. Like I said, if you're looking at potentially selling them, maybe at some, within the next 5 years, sooner is probably better than later in that scenario. And once again, guys, not individual investment advice, right? We're in a group setting, thankfully, but your timing's probably sooner is better than it's going to be better than later. And what do you do if all of a sudden you can't get rent for that house you own? I don't know. That's scary situations, certainly. Okay, guys.
They're going to suspend mortgage payments. Bank of America already has done that. You can request to suspend the mortgage payments.
Yeah, I heard that. Is that so? They're doing it on an individual basis?
You just hit up, if you have your loan through BOA, you just call them up and say, I need a defer.
No, but
my
I mean
payments.
across the board. Have you heard that for any other institutions, or is this just be?
I saw Ford and BMW are doing car payments too, or they're suspended for a temporary amount of time.
I'm just interested in my mortgages. I got 2 of them, so.
Right.
Call them up, tell them, hey, I can't pay.
Yeah, it's time to stop automatic withdrawals, huh?
Yeah.
Yeah, good point. And I was really thinking about it earlier this week, guys. Look, if you're in a really, really small regional bank, you probably want to yank your capital out of there and put it in a bigger one. A lot of them are going to go down.
Yeah, that's what I was questioning. You remember, did I ask you guys about that with the money markets? Yeah.
Yep.
Mm-hmm.
Yep.
Yeah, I'm still trying to understand what's going on with credit unions too, because they're capitalized. Well, you said the same way. I cannot find that information. I'm going crazy. I've been researching it, so I'm going to call them directly because I actually went through the NCUA website too to see if there was something on there. I love how they love to hide everything, so you don't really know.
Sure.
Ugh,
yeah, welcome to finance. The point is to confuse you, so that's why it's good to have people like Jason to walk you through it, right?
Yep.
Okay.
Yes, if I could clone his brain a little bit, it would be fine. But
Well, hey, that's why we're here in the webinars, Karen.
Oh, I know, but these things come up at random times, and it's like I want to go, oh, help! But it doesn't happen that way. But yeah,
Write them down. Yep, write them down.
Yeah, I know. Thanks.
Okay, let's see here, and a couple more things. Okay. And Dell says, what if you own free and clear, no rent, and no recourse? Definitely a better situation, Dell. That's certainly where you want to be with the home. And a lot of people don't realize too, with the mortgage, at the 30-year mortgage traditional, by the time you eat through taxes and fees, a lot of people don't understand that they're net negative unless they're in a market that appreciates over, the number was 6.7% a year. With general maintenance, taxes, and also the interest. And that was what I calculated out about a year ago, but a lot of people don't actually understand that. Okay, guys. Oh yeah, Dallas I'm talking about owning rental properties free and clear. Yeah.
Roy just tore the Band-Aid. Good for you, Roy. What was your favorite company you had to sell?
I can tell you mine was AMD.
Oh, God. Yeah.
I really love AMD. I think it's a wonderful company, and I think they're poised to really destroy Intel. But yeah.
Not in a Great Depression, they're not. Yep.
Yeah, agreed.
I mean, it's gonna be the battle of who has the most cash, guys, to get through this. Unfortunately. Dell says, who cares about 5G now? Yeah, Dell, I think 5G was the most overhyped BS thing on the planet, honestly. And boy, did they use that to sell stocks. Oh my God. So funny.
That and cannabis.
Right.
All the cannabis plays were overblown.
Oh God, that was such a nightmare of a market. I can't tell you too, Mark, how many people I've talked to that their whole portfolio was cannabis stocks. They're down 50%. They hadn't sold them.
So I do think 5G is very important, but people don't realize this is like a decade play. I mean, we can barely get high-speed internet here in Albuquerque, much less high-speed. I got 2 bars on my Verizon here, and I'm in prime real estate. So good luck getting me to 1,000 megabytes a second. Come on.
Yeah.
It is a huge industry. It's going to be a huge war, but it's going to cost trillions of dollars to build out, decades for all the layers to all the different companies to build layers upon it. And it will certainly be part of this either hot war or cold war against China. Because they're taking their entire $13 trillion economy and then trying to take over. That's one sector they do want to take over. And then you got Nokia and Ericsson over there. Where are they, like Swedish? How are those guys supposed to compete? China's practically paying people to use their equipment. So it's just that's why I thought this was all made no sense. Is because phase 2 would have crippled China. There's no way they were ever going to do phase 2. So why would they do phase 1?
My theory comes into play with that question. They never planned on it.
Yeah, they didn't. And now the long march begins. We must rebuild everything from the beginning. That was his quote last year, right before they signed the trade deal, which I was like, what?
Yeah, I mean,
I've been trying to catch us a crash since July last year, huh, guys?
Almost anything they do, you got to believe the opposite. These guys. That's my China speech for the day. Just never trust. Yeah.
Yeah, and I tell Jason a lot, like the CCP. It's hilarious. They're trying to say that no new cases reported yesterday. I saw that and I was like, I wonder how many idiots on the planet are actually going to believe that.
Yeah. I think hopefully it's getting to the point where they're really not. They're you hear it, they're saying it, and then they're going kind of under their breath. You hear the tentativeness as they're saying it, even in the news. It's kind of interesting. So I don't think anybody's believing it anymore.
Yeah.
And if they do, they're getting paid somehow by Chinese or getting money under the table or something. It's crazy.
Hey, Frank, and I sent you the link to set up the call. So thank you for asking about that. So you just click on that and select the time. Happy to connect with you. Okay, guys, any last questions before we wrap it up here? And just real quick, guys, you do have that link in the chat box if you are on trial to go ahead and get started with us. Okay, and if you have any questions, just give me a call. And if you'd like to, you can go to our coaching call page and book a call as well. Woohoo! Bye-bye, S&P 500.
It's so sad. The empire is on fire. All right, Ryan, let's go ahead and close it up. Thank you, guys. Keep safe. Stock up on food, and we'll see you guys Monday.
Yep. Thank you all for your time. Truly appreciate it.
Thank you, guys.
All the best, guys.
Stay safe.
Take care of you and your families. Thank you so much.
All right.
Thank you,
everyone. Thank you, Karen. Thanks, Barry. Have a great weekend, guys. Thanks, Eula. We look forward to working with you, bud.
Same here. Bye.
Okay. Bye-bye.